Here. Forgive the lighting. It is still really early here in the Pacific Northwest. It's about, I don't know, 3:30, 4 o'clock in the morning. Couldn't sleep, so I was up going through the information, trying to get the credible threat theory more refined. So when I put my course and book together and the things that I'm working on, I can then explain them a little bit better. And the more I do this, the more I just feel like I have to get the information out when I look at it. Like the more I look at it, the more I want to come out here and talk about it. And so here I am sharing with you again the information that I am going through to try and explain what is really happening out here. Like it's what people think. And it's just it blows me away that every time I go through this information, and I think about it and I look at the mainstream media and what it is happening out there, it is so like it is like two different stories that I'm like taking. Like the reality of the situation that I'm living in is not the reality of what it is that I'm reading here coming from the Federal Reserve. And when I look at what the Federal Reserve is talking about, the reality, nobody sees it. And it's just like, again, I don't know, I'm going crazy. So I'm sharing with you again the information. I left down in the description three speeches, three what I find very important speeches that if you are to internalize, if you are to go and read these speeches from the Federal Reserve itself and every component of it, like don't discredit anything that's being said in it. They're all very profound, everything that's being said. And when you go through them, these three speeches, you are going to see that there is an issue that was taking place within the Federal Reserve, and that is that they were running out of monetary policy. Like they desperately, desperately needed inflation in order to raise the interest rates. It was part of the plan. And now, first, I'm going to go and talk about these three speeches. I'm just going to give you a quick, understanding of the three speeches that we're going to talk about, and then we're going to start breaking them down. I left a few links down there. I left one to the Fed funds rate, right? That's very important to look at because the Fed funds rate is ultimately the Fed's main policy tool. And the Fed funds rate is their interest rate setting policy. So when the Federal Reserve is wanting to stimulate or restrict the economy, it is generally adjusting the Fed funds rate to do it. Now, they also have balance sheet adjustment, but that's a fairly new concept post the great financial crisis when they did the major expansion of the quantitative easing 1, 2, 3, and 4. So now all this stuff is incredibly complicated. And when you think about like all the little different pieces, the quantitative easing, the balance sheet adjustments, repo facilities, all this stuff, it just starts overwhelming you trying to understand what it is that's truly happening out there. So understanding these speeches and breaking them down, like if you go through this speech and you find something that you don't understand about it, research what that is until you do understand it. If there's something that's said, don't just pass it up. Just don't say, well, I'll figure it out later. No, stop right there, go back, read it, figure it out, and then move on. Because that's the only way you're truly going to get this stuff and to internalize it in a way that you'll be able to see it out there because nobody else is seeing it. I mean, literally nobody, all right? So if you internalize it in this way, you're going to be literally 1% of the people out there because I just don't get where anybody else is actually, other than the Federal Reserve, discussing some of the things that have been taking place over the course of like better than 25, 30 years now. This monetary policy has been enacted. They're not just flying out the seat of their pants over the last couple of years. This is something that has been going on for some time, serious time. And I'm going to break this stuff down and share it with you. We got a bunch of people up in here. Go and hit that like button. Hit the like button right away. The more you hit that like button, the more people who are going to join in on this, and the more people who get this information and understand it, the better off we're all going to be. Now, I understand not everybody's going to get this. And this isn't going to change the world. This is going to help us, the people who are watching this, the people who care. It's going to help us understand what it is that we need to do. So let's start breaking some of this stuff down. The very first speech we're going to talk about is we're going to talk about Ben Bernanke's speech given back in November of 2002. So something I find interesting is a lot of speeches are given in November, like really important ones. Anyhow, this is November of 2002. It's remarks by Governor Ben Bernanke. He wasn't even chairman at the time. He was a governor, right? And this is deflation and making sure it doesn't happen here. Deflation, right? Major concern. Now, I'm not going to go through the whole speech because it's just too much. You guys are going to have to do that yourself, right? But I am going to go and I'm going to talk about certain, points that are in this speech that I think are just incredibly profound, right? So, number one, like most people are going to start talking about is like, why is deflation even bad? All right. So let's go and maybe it's not up to us to understand why deflation is bad, right? We know why deflation is bad. We know why we would want deflation in our lives if we were a saver or a producer and have a lot of, not necessarily a producer, but a saver who has produced in our past, be able to take advantage of cheaper prices going into the future. Some of that stuff seems very logical when you are in that position. But if it's the position of growth that you are looking for because you're a central bank who's mandated for 2% or mandated for low inflation with stable prices and full employment, then you have to have this fairly low inflation rate that will be the growth that you are looking for to be stable and consistent, right? Now, I'm not trying to be defending, I'm just kind of explaining how the Federal Reserve would see it. All right, let's move on and let's talk about some of the stuff in here. So, again, we're going to break down a little bit of Ben Bernanke's speech of deflation and how to prevent it from occurring here. Now, let me see if I can find, I highlighted some spots in here. Okay. So you're going to have to understand what the Fed funds rate is, right? And so I'm going to do a brief description of the Fed funds rate, and it's complicated. So ultimately, the Fed funds rate is a target rate. Looks like the family just got up. All right. So the Fed funds rate is a target rate, meaning that they wrote it on the wall as if it was, just like, hey, boys, look at this. This is what we're shooting for, right? And so this target rate is the Fed funds rate in the sense that the overnight lending rate is the effective fund rate. So the target rate is the Fed funds rate. The effective fund rate is what the actual rate is taking place within the banking system. And at the time of this speech, it was the overnight lending rate between the big banks. Okay, so the overnight lending rate between the big banks can be adjusted by the amount of reserves they have on their balance sheet. So the Federal Reserve would buy and sell treasuries off the banks, the big banks like the JP Morgan, Goldman Sachs, all the big guys. They would buy and sell these treasuries off the big bank's balance sheet to adjust the level that was in the system in order for that overnight lending rate, when the ones who had excess reserves would lend them to the ones who were in need of reserves, that overnight lending rate would end up being the effective fund rate, and they could adjust the rates by doing that. Okay, I'm not trying to get too deep into it. I just want to quickly explain it. That has since changed and moved over to the repo facility and the account on excess reserves. But I want to explain how the Fed funds rate was operating at this particular time. So just make it simple because it's not simple. All right. Okay, what did Ben Bernanke have to say? He goes on to say this. Beyond its adverse effects in the financial markets and on borrowers, the zero bound on the nominal interest rates raises another concern, the limitation that it places on conventional monetary policy. Under normal conditions, the Fed and most other central banks implement policy by setting a target for the short-term interest rate, the overnight Fed funds rate in the United States, and enforcing the target buying and selling securities in the open capital markets. When the short-term interest rates hit zero, the central bank can no longer ease policy by lowering its usual interest rate target. So essentially what he is describing there is the failure to be able to stimulate the economy. Okay. Now, Because central banks conveniently conduct monetary policy by manipulating the short term nominal interest rates, some observers have concluded that when the key rate stands at near zero, the central bank has run out of ammunition. That is, it no longer has the power to expand aggregate demand and hence the economic activity. It is true that once the policy rate has been driven down to zero, a central bank can no longer use its traditional means of stimulating aggregate demand and thus will be operating in less familiar territory. Okay, so this is the problem that they will face. If they are going into a deflationary scenario, they will hit the lower bound of zero and they will fail to be able to stimulate the economy. Okay? Let me back it up a bit because I think understanding that being the problem, let's go back and talk just a little bit. Although deflation and the zero bound on nominal interest rates create a significant problem for those seeking to borrow, they impose an even greater burden on households and firms that had accumulated substantial debt before the onset of deflation. See, it's not just people like savers and stuff like that saying, "Hey, we would have a good time from it." What they are looking at is households and businesses that have accumulated an insane amount of debt beforehand, and how that deflationary aspect would hit them. The burden arises because even if debtors are able to refinance their existing obligations at low nominal interest rates, with prices falling, they must still repay the principal in dollars of increasing, perhaps rapidly increasing real value, meaning it's getting ever harder to get the dollars to pay back the debt. Even if they were to lower the interest rates, the principal payment on the because they had taken out a debt on an expensive asset, that asset now is dropping, and right, even if they were to refinance it, the money that they have to acquire to pay it back is also getting harder to find because it's gaining value, right? Where was I? Rapidly increasing value. Um, let's see here. This William Jennings Bryan made his famous Cross of Gold speech in his 1896 presidential campaign. He was speaking on behalf of heavily mortgaged farmers whose debt burdens were growing ever larger in real terms. The result of sustained deflation that followed America's post-Civil War return to the gold standard. The financial distress of debtors can, in turn, increase the fragility of the nation's financial system, for example, by leading into a rapid increase in the share of bank loans that are delinquent or in default. Japan in recent years has certainly faced the problem of debt deflation. The deflation induced ever increasing real values of debt. Closer to home, massive financial problems, including defaults, bankruptcies, and bank failures, were endemic in America's worst encounter with deflation in the years 1930 and 33, a period in which, as I mentioned, the U.S. price level fell about 10% per year. So, understanding that deflation is the Federal Reserve's scary, scary nightmare moment. Right? Let me move back up here. All right. The central bank's inability to use its traditional methods. Now, I'm jumping around on this speech because I think it's, a little easier to kind of explain what's happening here, at least in my opinion, to understand the situation we are in, but looking back at the reasons why it's happening, right? The central bank's inability to use its traditional methods to use oh, good Lord. Everybody take a sip of coffee for a second. Okay. The central bank's inability to use its traditional methods may complicate the policymaker's process and introduce uncertainty in the size and timing of the economy's response to policy's actions. Now, this is important to understand, right? Because as I've been trying to explain in my videos, their interest rate adjustments are not as effective as people think they are. Right? The central bank's inability to use its traditional methods may complicate the policymaker's process and introduce uncertainty in the size and timing of the economy's response to the policy's actions. Policy action is the movement, right? The movement of interest rates. Their timing and their response is differing. Hence, I agree that the situation is one to be avoided if possible. So this was scary. This was scary as hell. They did not want to hit the lower bound of zero. You got to think, when he gave this speech, I think the Fed funds rate had been dropping dramatically. It was like less than 2% at the time. And so this was like major concern. They had they haven't been this close to zero in all the previous decades leading up to it, right? Going all the way back into the, I don't even know how far back you would have to go to even see any time that it was even that close. But it was nowhere in these bankers' experience, right? Being this close to the lower bound of zero and running out of monetary policy, which is the adjustment of interest rates. All right. So, however, my principal message of my talk today is that central banks whose accustomed policy rate has been forced down to the zero has most definitely not run out of ammunition. As I will discuss, a central bank, either alone or in cooperation with other parts of the government, retains considerable power to expand aggregate demand and economic activity, even when its accustomed policy rate is zero. How do they do that? Now, typically, lowering interest rates stimulates the economy, raising interest rates restricts the economy. He's saying that even if you get to lowering the interest rates to zero and can't use lowering interest rates no more, it's no problem, because there's effective ways, right? I will discuss a central bank, either alone or in cooperation with other parts of government, retains considerable power to expand aggregate demand and economic activity, even when it is accustomed policy rate is at zero. In the remainder of the talk, I will first discuss measures for preventing deflation. The preferable option is feasible. I will then turn to policy measures that the Fed and other government authorities can take if prevention efforts fail. This is so important to understand, right? Because again, this is so long ago, but they were talking about, hey, we need to stop this from happening. But if it fails, if we fail at what we are attempting to do, what is it that we can do? All right. So again, I will then turn to policy measures that the Fed and other government authorities can take to prevent efforts. If prevention efforts fail and deflation appears to be, good Lord, I need to slow down, and appears to be gaining a foothold in the economy. All right. So I'm not going to go into how to prevent all this, because I'm just not going to go through all this stuff. He talks about maintaining a buffer zone. If the central banks, try to have this buffer zone between 1 and 3 and all this 2%, maintaining like this 2% target range kind of thing. And that failed miserably, right? Because we know like the 2% target didn't work. They tried that all post the great financial crisis, and it just didn't, that wasn't happening. All right. So he goes in here. Let me see. Okay. Second, the Fed, here we go. This is how they could prevent deflation from happening, right? It is responsible. Okay. I'm sorry. The Fed should take most seriously, as of course it does, its responsibility to ensure financial stability in the economy. Irving Fisher, 1933, was perhaps the first economist to emphasize the potential connections between violent financial crises, which led to fire sales of assets and falling asset prices, with general declines in aggregate demand in the principal level. A healthy, well-capitalized banking system and smoothly functioning capital markets are an important line of defense against deflationary shocks. The Fed should and does use its regulatory and supervisory powers to ensure that the financial system will remain resilient and financial conditions change rapidly. And at the times of extreme threat to financial stability, the Federal Reserve stands ready to use its discount window and other tools to protect the financial system, as it did during the 1987 stock market crash and the September 11th, 2001 terrorist attack. That is exactly what they did during the financial crisis, right? So they were well prepared for it. They knew that there was going to be an issue that was going to come. And that's why I going back and reading the speech is so critical to understanding what is happening and understanding that right there, like knowing that they were well aware of the situation ahead of time that was going to be coming and that they had a plan that they could use that would deal with the situation, right? Now, was it enough? Probably not, right? Because they ended up having more issues coming from it. It didn't exactly like save the economy, and they were back at their lower bound again. Where do I want to go with this here? Um, okay. Third, as suggested by a number of studies, when inflation is already low and the fundamentals of the economy suddenly deteriorate, the central bank should act more preemptively and more aggressively than usual in cutting rates. Um, by moving decisively and early, the Fed may be able to prevent the economy from slipping into deflation, with the special problems that entails. As I have indicated, I believe that the combination of strong economic fundamentals and policymakers that are attentive to downside as well as upside risk to inflation makes significant deflation in the United States in the foreseeable future quite unlikely. But suppose that, despite all the precautions, deflation were to take hold in the U.S. economy, and moreover, the Fed's policy instrument, the federal funds rate, were to fall to zero, what then? Right? So you think about it. Ben Bernanke was talking about how to prevent it from happening all the way up until this point. Like he was saying, hey, we need to prevent deflation, prevent deflation, prevent it. But what happens if it fails and we can't prevent it from occurring anymore? What happens? What then? Right? He says, oops, go up here. Sorry, my computer around when I touch it here. All right. All right. So what then? Right? Let me start with some general observations about the policy at the zero bound, sweeping under the rug for the moment some technical operation issues. As I have mentioned, some observers have concluded that when central banks' policy rates fall to zero, its practical minimum, monetary policy loses its ability to further stimulate aggregate demand in the economy. At the broader conceptual level, and in my view, in practice as well, this conclusion is clearly mistaken. Indeed, under a fiat, that is paper money system, a government, in practice, the central bank in cooperation with other agencies, should always be able to generate increased nominal spending and inflation, even when the short-term nominal interest rate is at zero. So here we go. Like all the prevention measures have failed. Now what? All right. The conclusion that deflation is always reversible under a fiat money system follows from basic economic reasoning. A little parable may prove useful. Today, an ounce of gold sells for $300, more or less. Now, suppose that a modern alchemist solves his subject's oldest problem by finding a way to produce unlimited amounts of new gold at essentially no cost. Moreover, his invention is widely publicized and scientifically verified, and he announces his intention to begin massive production of gold within days. What would happen to the price of gold? Presumably, the potentially unlimited supply of cheap gold would cause the market price of gold to plummet. Indeed, if the market for gold is to any degree efficient, the price of gold would collapse immediately after the announcement of the invention. before the alchemists had produced and marketed a single ounce of the yellow metal. What has this got to do with monetary policy? Like gold, the US dollars have value only to the extent that they are strictly limited in supply. But the US government has a technology called a printing press, or today, its electronic equivalent, that allows it to produce as many US dollars as it wishes with essentially no cost. By increasing the number of US dollars in circulation, or even by credibly threatening to do so. Also reduce the value of dollars in terms and goods and services, which equivalent to raising the prices in dollars of those goods and services. We conclude that under a paper money system, a determined government can always generate higher spending and hence positive inflation. That right there is the heart of the credible threat theory. Think about that for just a second. He ran out of options. All the options of trying to prevent the lower bound of zero and the stimulation of the economy and all this stuff to try and keep it didn't work. So eventually they had to say, hey, what are we going to do? All right. Well, we're going to have to come up with some really, really, really good story. Right? A really good story, because ultimately they ran out of their traditional monetary policy of adjustment of interest rates when you hit the lower bound of zero. It's over, done, right? Okay, going on. Of course, the government is not going to be printing money and distributing it willy-nilly, right? Although, as we will see later, there are practical policies that approximate this behavior. Really? You think? I mean, how long did it take before it really happened? Okay, let's see. Normally, money is injected into the economy through asset purchases by the Federal Reserve. To stimulate aggregate spending within short-term interest rates have reached zero, the Fed must expand the scale of its asset purchases. Remember, what he is about ready to talk about is after everything else of preventing deflation has failed. They failed. They screwed up. It's not working. That's okay. We got this here gold story we just told, and now we're going to tell you how we're about ready to do this, okay? So remember the gold story, because here we go. This is what we're about ready to do, yo. Okay, to stimulate aggregate spending with short-term interest rates have reached zero, the Fed must expand the scale of its asset purchases or possibly expand the menu of its asset that it buys. Do you know what this is that he's talking about? It's quantitative easing. Alternatively, the Fed could find other ways of injecting money into the system. For example, by making low interest rate loans, the banks, or cooperating with the fiscal authorities. Each method of adding money to the economy has advantages and drawbacks, both technical and economic. One important concern in practice is that calibrating the economic non-standard means of injecting money may be difficult given our relative lack of experience with such policies. Thus, I have stressed already, prevention of deflation remains preferable. Yeah, but guess what? It didn't work. Right? Couldn't prevent it. It was a preferable thing. We don't want to do this. It would be best if we didn't, but you did. But you did, Ben. It did happen. All right. I have stressed already, prevention of deflation remains preferable to having to cure it. If we do fall into deflation, however, we can take comfort that the logic of printing press example must assert itself, and sufficient injection of money will ultimately always reverse deflation. So, what then might the Fed do if its target interest rate, the overnight federal funds rate, remember this is the target rate that we're talking about, fell to zero? One alternative straightforward extension of our current procedures would to try to stimulate spending by lowering rates further out along the Treasury term structure, that is, rates on government bonds of longer maturities. Think about this. This is all the stuff that they were doing to prevent deflation. This is what we're experiencing right now. All right. I just lost it. There are at least two ways of bringing down long-term rates, which are complementary and could be employed separately or in combination. One approach, similar to an action taken in the past couple of years by the Bank of Japan, would be for the Fed to commit to holding overnight rate at zero for some specified period. This is what he is describing is quantitative easing, right? 1, 2, 3, and 4. Asset purchases and interest rates at zero. Again, this is years, 5, 6 years before it took place. Right? You know, I mean, people say, "Oh, that dude's a moron. Don't listen to him." Are you sure? I mean, are you sure? I mean, I guess everybody who says that is probably falling right into the Federal Reserve's plan to create an inflationary scenario because it works, right? They desperately needed inflation. I mean, can you hear the desperation in them? All right. Because long-term interest rates represent average. All right, hold on, let me make sure I got this. One approach similar to an action taken by the past couple of years by the Bank of Japan would be for the Fed to commit to holding the overnight rate at zero for some specified period. Because long-term interest rates represent averages of current and expected future short-term rates, plus a term premium, a commitment to keep short-term rates at zero for some time, if it were credible, would induce a decline in the long-term rates. A more direct method, which I personally prefer, would be for the Fed to begin announcing explicit ceilings for yields on long-term maturity Treasury debt, say bonds maturing within the next 2 years. The Fed could enforce these interest rate ceilings by committing to making unlimited purchases of securities up to 2 years for maturity at price consistent with the target yields. If this program were successful, not only would yields on medium-term Treasuries securities fall, but because of links operating through expectations of future interest rates, yields on long-term public and private debt, such as mortgages, would likely fall as well. Okay. So again, like I bring this up because it's so important to understand. Like this was well thought out ahead of time. Like they knew there was going to be an issue coming. And they were thinking, okay, what is it that we need to do? And they described it. Okay, I'm going to end it. I'm going to end this part right here. There's plenty more. There's plenty more to this speech, right? Again, take this speech, internalize it for yourself. Like learn it, read it, understand it. If there's anything that is confusing, go back, research that until you have internalized it and understand it so you can read this thing completely and know it. In these 3 speeches, you're going to have to do that. It may take you a while. It may take weeks and months. It took me years. So, I mean, if you think about it, if it takes you a week or so to get this thing, that's awesome because it took me years to figure it all out, right? So I'm just giving you the shortcuts here to doing this. I'm going to read this one last paragraph and we're going to call it good and move on to the next speech. All right. Lower rates over the maturity spectrum of public and private securities should strengthen aggregate demand in the usual ways and thus help to end deflation. All right? So this is the quantitative easing that he was talking about. Of course, if operating in relatively short-dated treasuries debt proved insufficient, the Fed could also attempt to cap yields on treasury securities at still longer maturities, say 3 to 6 years. Yet another option would be for the Fed to use existing authority to operate in markets of agency debt, for example, mortgage-backed securities like Ginnie Mae Government National Mortgage Association. Right there, right? Balance sheet expansion, mortgage-backed securities, right? U.S. Treasuries. They were doing that to prevent the deflationary scenario. Right? They desperately needed inflation. They couldn't they were figuring out, trying to figure out how to prevent this from happening. They couldn't. They were desperate, right? And now you think about it, it was the gold story that he told first, and then said, okay, all this stuff that we're doing should basically be the credible threat. And now I think about that because everybody says all this money is going to create inflation. I thought it was too, right? I really did. I thought, man, all this money, quantitative easing 1, 2, 3, and 4, balance sheet expansion from $850 billion to $4.5 trillion. No way is it not going to create inflation, right? However, that money never really left the banking system. It sat on the big bank's balance sheet. All right. Moving on. So, very important speech. Again, these links are down in the description for you guys. I'm going to take just a quick break to read some comments here. Go hit that like button. We got 206 people watching right now with 110 likes. Thank you so much for hitting that like button. Plenty of you are doing it. I see the super chats. We're going to go read up on some of those real quick. And then we're going to move on to the next speech. Okay, Larry Bird, man, you're loading me up. Thank you so much. We got $1.99. 1, 2, 3, 4 times with the $1.99. Thank you so much. And then again, $4.99. UE the GOAT. Hey, thank you so much, Larry, man. I really appreciate all that support through the super chats. You are very kind, man. Thank you. All right, let's go read a couple of these comments down here at the bottom. Tim says, good morning, UE. Haha, I didn't think anyone else on the planet slept as little as me. I actually slept in tonight. Could you start around 3 a.m. next time? I'm making the coffee. Hey, great. Yeah, I was actually about ready to start at 3 a.m. So, you know, you're up early. I am. Randy Burgers, if that. Uh-oh. This number. Okay. UE, my PowerPoint is nearly done. I'm just trying to stop being so nervous on the mile. Hey, great job. Cody's are one of our younger viewers here who has caught a great interest not only in economics, but in silver specifically, and feels silver being the best investment that one can get into, and has created a very fun, informative PowerPoint presentation. And he is refining that PowerPoint presentation to one day maybe even get it in front of a group of people. But it's fun to watch the growth, and it's fun to watch how the younger crowd is moving into this understanding, and getting into it early is the only way you're really going to have the best outcome for your future. I mean, I got into it late, and you can see, like, you know, I'm doing my best, you know. All right. So thank you, Cody. Thank you for being here, brother. All right. April, but the way you explain in what would have explained the higher price but profit. Okay, but the way you explain it, what would have explained the higher prices but profit? Your employees got to be pissed. No, I told her I was getting up and doing this. I'm not sure, April, what the question is. Good morning, UE. Keep doing what you do. Appreciate you, man. Dogs tell me when to get coffee around 3 a.m. Yeah, that's what I'm assuming was happening right there. Good morning. Which speeches are you reading from, and about when were originally read? I'm joining late. Okay, Adrian, down in the description, I left links to all the speeches. This is Ben Bernanke, November of 2002, Deflation and How to Prevent It from Occurring here. That was the speech I had just read. Okay, you sleep. Your sleep has been messed up lately. Are you feeling all right? Just want to make sure you're taking care of yourself. I've never slept right. If it's not actually inflation, but prices keep going higher. Oh, April. Okay, so I guess probably the question is like, if it's not the money printer, then what's causing the inflation? And a lot of what we are experiencing from the inflationary scenario over the last few years had more to do with the supply chain breakdown than it did with the actual money printer go burr kind of aspect. Did money printing cause inflation? Absolutely. You can't have like inflation without money, right? You got to have the money to have the inflation, but inflation can be created by supply demand imbalances. And it could also be created by money velocity. Now, just because the money was printed doesn't necessarily means that money was making it into the system. We did get the money into the system through stimulus checks, but that was ultimately a flash in the pan and doesn't have a consistent, contribution to the demand. Because what happens is that when you have new money, you go out and spend that money because you have got the new money. The new money is increasing your demand, right? You want to go out there and spend it on, whatever it is that you like. And now everybody else is doing that at the same time. So it's entering in at all channels. Now, typically what Ben Bernanke was talking about was loading up the banking system, and then that would end up being locked up in the banking system. But the perception that people have over it is that it's going to create this inflationary scenario, which is exactly what it did for a lot of assets like houses and stuff like that, because you borrow money at low interest rates in order to acquire those assets. But the rest of the things in the economy, like our wages and our standard of living, had pretty much stayed stagnant and just kind of fairly, kind of just grew a little bit. Not like houses and other assets, stocks and bonds and stuff that you borrow money to buy. So if you were borrowing money, you had cheap money, access to cheap money, got into assets. This is how like the separation between the rich and the poor started growing really exponentially after that, right? That's the real problem that we face from the new money. It's not necessarily inflation that comes from it, it's the separation between the rich and the poor. And then in turn, our standard of living becomes more difficult over time, as like acquiring houses is difficult, but yet we have like all these like conveniences like cell phones and access to food and all kinds of stuff. It's kind of a weird thing that happens. But ultimately, the inflation that we had experienced over the last few years was from the supply chain breakdown. And then all of a sudden, a stimulus check hit us. Everybody went out there, cleared the inventory out, and then boom, there's no inventory, supply demand imbalances, and you will find inflationary scenario from that. It was very difficult to resupply as everybody was staying locked down and stuck at home and all this other stuff, and that money just kept flowing into the system, right? People kept spending it, and because they had it sitting in their bank accounts or whatever, getting these stimulus checks or however. So once that ran out, in the supply basically reestablished itself, like what we are experiencing now, and people aren't getting the stimulus checks. Well, now we're starting to see where the inflation that was supposed to run rampant is disappearing, like it's going away. Well, the quantitative tightening has taken a bunch of money out of the system, but it hasn't taken like that much out of the system, right? I mean, it's a lot. It's and it's a huge amount. But the overall expansion of the balance sheet is still fairly prevalent within the economy, but the inflation is disappearing. So if the money printer prices go up, what's going on, right? It's because, again, money velocity is slowing down. When interest rates are elevated, less people are borrowing money, less activity within the economy, and supply demand imbalances start finding their equilibrium again, right? And this is really what's going on. To understand it in this fashion, that it's more about how people are spending their money than it is about the amount of money within the system, because really money is debt, and it's unlimited amount of debt. Right? It's an unlimited amount. Anybody can go out and borrow as much as they want, essentially, right? And that's how the creation of like demand comes from, is from the amount of debt that people are taking out. So there's an unlimited amount of debt. Now, whether you as an individual have the ability to take it out, that's a different story, but the ability to take out debt just exists all the time. So again, like, where does inflation really come from? It comes from supply demand imbalances. That's where it comes from. And to understand that, when you lower rates, that generally you're going to increase demand. However, it doesn't necessarily work in that fashion anymore once you have reached the lower bound of zero and all that. I should back up a little bit, Sasheen. And yeah, let me do that. Everybody will be like, what's going on in the background? There we go. Okay. She turned off the lights anyway. All right, let's move on to the next speech here. What time is it? God, 45 minutes? It took that long to get through that? Oh, no, this is going to take forever. All right, I'm glad you guys are here. Okay, next speech. So if you understand deflation and all that stuff was the major problem and that they were going to use the story of the gold machine, right, to deal with the fact that they were going to have to create an inflationary scenario in the future, and a lot of inflation has to do with inflation expectations. Now, what happens when monetary policy is at the lower bound of zero and you have a low neutral interest rate, right? See, this is the problem that they were facing in 2018. So, again, knowing well ahead, of what the major problems were going to be, because you think about it, like after what Ben Bernanke was talking about, like things kind of chilled out, right? Everybody was really happy. This is like, you know, stock market's ripping, everybody's doing really good, and everybody's really happy. And we're getting into 2018, and there's a lot of economists who are screaming, man, we have gone on too long without a recession, and there is problems on the way, and we are going to see them majorly. And considering that they have not raised the Fed funds rate enough to actually stimulate the economy, they still have some major issues taking place. And now this speech is Monetary Policy Strategies for a Low Neutral Interest Rate World, given November 30th of 2018. This is by John Williams, the New York Fed president. And now I have said this exact statement so many times, right? But it's so important to understand because remember, Ben Bernanke was talking about how deflation is a major problem and preventing it was the major concern, and that if major concern of preventing it was to fail, they would have to come up with some extraordinary ideas, and quantitative easing was one of them, and we certainly went through all that. So his worst case scenario on how to deal with it, we experienced. Right? All right. Today, we face an altogether different set of problems stemming from a very low neutral interest rate. That is, the short-term real interest rate consistent with an economy operating at its potential alongside low and stable inflation. Ironically, the problem we need to solve these days is the risk of inflation that is persistently too low rather than too high. Remember, right? Ben Bernanke was just like, man, we got to prevent deflation. We got to figure out how to find inflation. All the way till 2018, the problem that we face today is an inflation that is persistently too low rather than too high. Man, this is going on for what, 16 years now between these speeches. 16 years. Still trying to figure out how to deal with too low of inflation. Isn't this amazing? Like most people would have no clue about this. Think about this for just a second. Internalizing this information is something that you will have that is so unique that nobody else knows. Like literally nobody. I don't even find anybody on the news who knows this. All right. It was funny. I told a couple of people not on my channel, and I'm not going to say exactly who it was, but I was offered through somebody sent me an email. It's like, hey man, I got this channel, I would love for you to debate this particular economist out there who's saying a lot of things that are very different from you, and they're very prevalent out there on the mainstream media and out there on the social, out there on YouTube and stuff. And I thought, whoa, what an honor. Hell yeah, I'll debate them. I would love to. Never heard back. Well, maybe they're set up. I mean, I know that other economist that they're talking about is extremely popular and busy. So maybe they're going to with the time that's are available for them, and I have to coordinate with it, and I totally will. Or maybe they were just testing me to see if I would be really willing to do it. Absolutely. Go ahead. Let's do it, man. If you can set that thing up, man, I would love to do that. I mean, hey, I gotta stand up and prove myself from all the things that I've been saying out here. And if I can't debate even the highest level economist out there on monetary policy and what I feel is really truly taking place, then I don't know what I'm doing here. Right. So yeah, I'm willing to step up and debate anybody. I don't care who they are. Right. So you can suggest anybody. I'll take it. Right. I mean, at this point. Okay. Now in this speech, there's some really interesting things that he goes on to talk about, right? Now, understanding that the Federal Reserve at this point had like, I think the Fed funds rate was at like 2.5%. So when they want to drop those interest rates to stimulate the economy, typically it would be around 5%. So running out of monetary policy is essentially hitting the lower bound of zero. And if you're already at 2.5%, you know you ain't got nothing, right? You have no chance. Now, we just went through the quantitative easing and all this other stuff, which was going to create the hyperinflation scenario that destroys everybody, but it didn't work, right? It still didn't produce the 2% inflation rate that they were targeting, right, during that time, because at that time they did truly have a 2% target, where if inflation was running above 2%, they would adjust policy to hit 2%. If it was under 2%, they would adjust again to come up and try and target 2% and let the bygones be bygones. That's very different from what they're doing today. However, that was the approach that they were taking at the time, right? So they failed it. They couldn't do it. At that time, they were still under 2% and had yet to achieve the 2% target. And that was why it was persistently too low rather than too high. So, or I mean, why they were facing issues, right? It's because it was still too low. Today's low interest rate reflects a culmination of trends extending back 25 years. A quarter century ago, a typical estimate of the neutral rate in the United States was 2 to 2.5%, consistent with historical averages over the preceding half century. Since then, however, there has been clear downward trend in the neutral interest rate in the United States and other advanced economies, with current estimates ranging from 0 to 1.5%. Okay, think about this for just a second, right? This is the neutral interest rate. This is the rate that is neither accommodating nor restricting the economy. And what Williams is saying here, what John Williams is talking about, is that neutral interest rate over the course of the 25 years, as the Fed funds rate was also falling, and they were using it to stimulate the economy with 5% interest rate drops, it was also falling, and it had eventually gone down close to zero. Now, nobody knows exactly where the neutral interest rate is. You can see it over time, right? If you look back, you can find it, but nobody knows where it is currently. And so there is just only estimates of what the neutral interest rate. However, they do know that it is very low. And again, in 2018, it was somewhere close to zero. Again, stimulating the economy by dropping interest rates from even the 2.5% to zero meant that they were not going to stimulate the economy. They would hit neutral, right? They were out of policy. Excuse me, guys. Three main global trends appear to account for the bulk of the decline in the neutral rate over the past quarter century. One is demographics. The populations are aging and people are living longer, and birth rates have fallen, right? And this is something that we talk about a lot, right? I mean, everybody is talking about falling birth rates across the, nations and all that other stuff, okay? So older population, less younger people. The second is productivity growth, which has slowed around the world. And the third is the heightened demand for safe and liquid assets. What they're talking about is the treasuries, like U.S. government debt, right? U.S. government bonds. The heightened demand for safe and liquid assets, which has led to a wider wedge between yields on safe government securities or central bank reserves and yields on the riskier assets such as corporate bonds. Okay, very important to understand. These three issues were the reason why there was a dropping in the neutral interest rate, which is a major issue for the Fed funds rate to stimulate the economy. Even if you were to drop 2.5%, it doesn't stimulate, it hits neutral, right? In fact, there was estimates coming from the Federal Reserve saying that they would have had to take interest rates to like negative 6% in order to have any kind of real stimulating effect on the economy. That's why everything else, you remember, like what Bernanke was talking, the gold machine is the effective tool. Remember all the quantitative easing and all that came after the gold machine, inside of his speech. All right. Okay, importantly, the onset of these trends preceded the global financial crisis, and they have continued even as countries have recovered. All right, so those issues were taking place are still issues, and they're still going. Although there is a great deal of uncertainty about the neutral rate and conditions may change, a reasonable assumption is that they will remain low, not far from current levels for the foreseeable future. No matter what you do, you're not going to be able to raise that neutral interest rate. What does the low neutral rate mean for monetary policy and anchoring inflation expectation? When a recession hits, this is the problem. Okay? So this is a problem. I highlighted this. When a recession hits, central banks may not be able to reduce interest rates well below the neutral level to stimulate the economy as warranted because of the effective lower bound on nominal interest rates. They're done. It's over. All right? Interest rate adjustments just don't work. Better figure something else out. The shortfall of monetary accommodation would result in less desirable economic outcomes during the recession and recovery. In particular, inflation would typically undershoot its desired target during these episodes. The persistence of below target inflation rates in many advanced economies over the past decade is a testament to this dynamic. As a result, see, like you're saying, it just doesn't, As a result of the inherent asymmetry introduced by the lower bound on the interest rates, an inflation targeting central bank could experience inflation that is below target once we consider the average inflation rate over periods when policy is constrained and those when it is not. With inflation on average below the target level, inflation expectations will slip below the target rate as well. A simple example helps illustrate this problem. Say 80% of the time, the lower bound on interest rates does not constrain policy, and the central bank aims for 2% target inflation rate. During these good times, an inflation targeting central bank aims to keep inflation near 2%. But 20% of the time, the economy falls into recession. That's severe enough that the lower bound constrains policy. Assume that during these periods, inflation averages only 1%. So, 80% of the time, inflation averages 2%, and 20% of the time, inflation averages 1%. The resulting average rate of inflation is about 1.8%. As a consequence, inflation expectations, right, are likely to become anchored at the long-run average of 1.8% below the desired 2% target. But that's not the end of the story. Here we go. This is important. Again, I highlighted this part. The downward shift in inflation expectation has a second-round effect on real interest rates, the economy, and inflation. When policy is constrained by the effective lower bound, the downward shift in inflation expectation raises the real interest rates, further diminishing the degree of monetary stimulus, making the downturn worse and reducing inflation even more. Even in times when policy is not constrained, the expectation of below target inflation in the future affects current decisions, putting additional downward pressure on inflation. In other words, monetary policy is always swimming upstream, fighting a current of too low inflation expectation that interferes with the achieving the target inflation rate. You hear this? They were failing because your inflation expectations were too low. You better have higher inflation expectations in order to achieve the monetary policy. This is what he was saying. I mean, I'm paraphrasing here, but I mean, that's ultimately what he was saying, right? So, okay, anyhow. The second, he goes into what some of the options are. I'm not going to go through all the options. I'm just going to read this last part because we're almost an hour into this and we got a few more speeches to go through. All right. So one of the options to dealing with this scenario, right? To dealing with the scenario of too low of inflation expectation that is interfering with the monetary policy and they are no longer able to deal with okay, let me see here. Okay, second round. Okay, so all these options here. Second option is average inflation targeting. This is important to understand. Average inflation targeting, whereby central banks purposefully aims to achieve an above target inflation rate in good times. Good times, he quotes. When the lower bound is not a constraint, properly designed and implemented, such an overshoot can offset the inflation undershoot during bad times so that the long run average inflation rate and inflation expectations, right, are in line with the target. See, it's important. They must have inflation expectations well anchored at the 2% or whatever it is. Like, that's why they're so constantly talking about a 2% target, because they want you to make sure that your long run inflation expectation is at 2%. You know it's not there today, but your long run expectation is that it's going to be there. And if you have an elevated inflation expectation today, it actually contributes to the effectiveness of their monetary policy, which was constantly swimming upstream against an inflation expectation that was persistently too low. Important to understand this stuff, right? Blows your mind away if this is the first time you've ever heard this. Most people who are sitting here on this channel going, dude, it's the same thing you say every single day, dude, say something different. No, what we are learning here is something that probably 99.9% of the people have no clue. You go and ask 1,000 people what the neutral interest rate is, and they would have no idea what the hell you just said. Right? Those who follow us on this channel, the people who have been here, we know all about. This is John Williams' speech, Monetary Policy Strategies for a Low Neutral Interest Rate World, same one that I constantly quote from. Right? And I bring this one up because it, like, to me at the time, like, when I was reading this, I'm like, how in the world do you plan on getting inflation, dude? Like, you tried all this quantitative easing, $850 billion to $4.5 trillion balance sheet expansion. Didn't do it. Now what, right? Okay. So again, go through that speech, internalize everything in it. There's a lot more to it. There's so much more to that speech than what I had just read, but I don't want to keep you guys here all day. So, all right, we got Larry Bird again with the $1.99. This is for Benny the Joe. And thank you so much. All right, PM Galleria, thank you so much for the $10. Trump wants to absorb Fed's then Treasury controls printing again, and the Fed's members get away with no accountability. So win-win. Dollar has renewed life. Economy gets a heart transplant. I don't know. Like, I think if you left money printing up to the decisions of Congress, I think you would have people like Elizabeth Warren take advantage of their constituents' stupidity and convince them that money printing beyond belief and lower interest rates is, somehow an awesome thing. And then meanwhile, she would separate herself from the rest of the poor people out there, because that's what she would ultimately be doing. Right. Like, I think that that's a terrible idea. I mean, I don't think what we have is a good idea, but I think that's a terrible idea. Honestly, to put that, I mean, sorry, PM Galleria, I don't mean like if you like the idea. I don't like that idea, and I don't like the idea of the Federal Reserve in general. But I would much rather have them be this independent, whatever that is, than to be left up to Congress. Because I don't think the people we have in Congress would follow things that are in this, right? And so understanding this and following this is very important, which means that ultimately you can't even have a fiat currency system to begin with. You would have to go back to a gold standard in order to stay within the confines of the Constitution. And so with all that being, well, no, right? I mean, might as well just have it be an independent than to have like corrupt Congress people really screw it up because they're just trying to, bend to their constituents or whatever it is, stay in office so they can continue with their political powers and wealth gainings. That's just my personal opinion. I mean, maybe I'm wrong. I don't know. Okay, so we got those two speeches down talking about deflation, how to prevent it from ever occurring here, and the low neutral interest rate and a persistent, or the problem with monetary policy fighting an inflation expectation that was persistently too low. Okay, so what happened shortly after this speech? Dun, 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 pandemic, right? So we get hit with the pandemic. And now all of a sudden there's all this change to the economy. I mean, a whole new world. I mean, we don't even live in the same place anymore. And there certainly is a whole new strategy underway, right? Maybe, possibly. I don't think so. All right. In this one, this is Powell, Jerome Powell, giving a speech August 20th of which one am I looking at? This is the wrong speech. That speech. There we go. August 20th of 2020. August 27th. There we go. August 27th of 2020. And it's titled New Economic Challenges and the Fed's Monetary Policy Review. Now, this speech is absolutely mind-blowing to think about because almost everybody, and this is a good speech, like the whole thing, you should really read through the whole thing. I'm not going to do that to you today because, again, it's fairly long, but it's a really good speech. Internalize all the information within it, and you're going to find that you're going to do so much better with understanding what's going on in the economy today. All right. So here's the problem that was being faced, right? The persistent undershoot of inflation from our 2% long-run objective. That is the problem that the Federal Reserve was facing, right? Now, we know from monetary policy strategies, right, that the idea of running inflation extra high for extra long for an extended period of time to make up for the shortfalls from the 2% target was well aware of was part of their strategies way ahead of time. So you have to think about it. They've been thinking about it a hell of a long time before they were able to come up with the idea for the speech. Right? So, and I'm sure if you went and looked at it, you'd probably find more of this, ideas of that in speeches dating back earlier than even that one. All right, so let me go. This is Powell again in August 27th of 2020. The persistent undershoot of inflation from our 2% long-run objective is a cause for concern. Again, this is like early stages of the pandemic. Many find it counterintuitive that the Fed would want to push up inflation. Not after you read the Ben Bernanke speech and the John Williams speech. It totally makes sense that you would want to do that to save your asses, right? Because you're running out of monetary policy. After all, low and stable inflation is essential for a well-functioning economy. And we are certainly mindful that higher prices for essential items such as food, gasoline, and shelter add to the burdens faced by many families, especially those struggling with lost jobs and incomes. However, if inflation that is persistently too low can pose serious risk to the economy. I mean, so much so that over the last, 18 years, you had been discussing how to deal with the fact that the inflation was too low. Inflation that runs below its desired level can lead to an unwelcome fall in the long-term inflation expectations, which, in turn, can pull actual inflation even lower, resulting in an adverse cycle of ever lower inflation and inflation expectations. Right? So again, pandemic's kicking in. Right? Well, I mean, this is early stages of the pandemic. They're like before the inflation even happened. Really, you think about it. I mean, this is August 27th of 2020. So inflation hadn't even taken not a serious amount. I don't even remember if it was even talked about yet. But we were about ready to experience some of the worst inflation anybody, like mind-blowing, kill you level style inflation. It was about ready to hit us. And he's talking about how, persistently low inflation, really bad, better have some higher inflation expectations, right? In August of 2020, or August 27th of 2020. All right, moving on down the line. All right. Let me read a little bit more of this. This dynamic is a problem because expected inflation feeds directly into the general level of interest rates. Well-anchored inflation expectations are critical for giving the Fed the latitude to support employment when necessary without destabilizing inflation. But if inflation expectations fall below 2% object, interest rates would decline in tandem. In turn, we would have less scope to cut interest rates to boost the employment during an economic downturn, further diminishing our capacity to stabilize the economy through cutting interest rates. We have seen this adverse dynamic play out in other major economies around the world and have learned that once it sets in, it can be very difficult to overcome. We want to do what we can to prevent such a dynamic from happening here. Right? They're scared of it. They are scared of deflation. Scared, scared, scared. Do not want it. Anything they can do to prevent it from happening is their outcome, whatever they can do. All right, let me cruise down here. Again, I'm not going to read this whole speech. You really should. It is super, super, super important to understanding what's going on right now because everybody, 99.9% of the people out there are going to say that the Federal Reserve is attempting to go for a 2% target. They are not. Don't believe it. Don't believe it for a second. It's a 2% average inflation rate over time, the long run expectation of 2%. Right? But current inflation is more about getting their inflation average up because they were persistently under and the inflation expectation had fallen. And it was a problem for them to stimulate the economy with the low neutral interest rate. All of it was a major issue and they had to fix it. They freaking had to do it, right? It's like so like it you have to like take it in that intense form that they were like in panic, like not necessarily they were calm about it, you think about it, but ultimately this is like if they didn't do this just right, it was ending. It was going to end. All right. Important changes. Here we go. We have also made important changes with regard to the price stability side of our mandate. Our long-run goal continues to be an inflation rate of 2%. The long-run goal. Right? That's important because every time you ever hear him talk about is 2% over time, 2% goal, 2% whatever, but it's not a 2% target like everybody seems to believe. Our long-run goal continues to be a 2%. An inflation rate of 2%. Our statement emphasizes that our actions to achieve both sides of our dual mandate will be most effective if the long-term inflation expectations remain well anchored at 2%. However, like we learned from John Williams, if inflation runs below 2% following economic downturns but never moves above 2% when the economy is strong, then over time inflation will average less than 2%. Households and businesses will come to expect this result, meaning inflation expectations will tend to move below our inflation goal and pull realized inflation down. Geez, sounds just like what John Williams was saying was going to be the problem, right? How did What did John Williams say back just 2 years earlier? When policy is constrained by the effective lower bound, the downward shift in inflation expectation raises the real interest rates, further diminishing the degree of monetary stimulus, making the downturn worse, reducing inflation even more. Right? Okay. To prevent this outcome in adverse dynamics that could ensue, our new statement, the new statement, right? The old statement was we're going for a 2% target. The new statement indicates that we will seek to achieve inflation that averages 2% over time. Therefore, very important, following periods when inflation has been running below 2%, like post-Great Financial Crisis, all the way leading up to 2018 being a major problem for monetary policy strategies, being a low neutral interest rate world, very much like what we were experiencing right up until he was giving this speech. Right? Therefore, following periods when inflation has been running below 2%, appropriate monetary policy will likely aim to achieve inflation moderately above 2% for some time. In seeking to achieve inflation that averages 2% over time, we are not tying ourselves to a particular mathematical formula that defines the average. Thus, our approach could be viewed as a flexible form of average inflation targeting. Our decision about appropriate monetary policy will continue to reflect a broad array of considerations and will not be dictated by any formula. Of course, if excessive inflation pressures were to build, or inflation expectations were to ratchet above levels consistent with our goal, we would not hesitate to act. All right, so Powell has changed the way that they view the inflation target. It's not a 2% target. That was the old classical form of understanding the Federal Reserve's monetary policy. It is critical for them to express out there to the people that they are going for a 2% target, because anchoring inflation at 2% over the long run is absolute critical for their monetary policy and being able to stimulate it during times of need, of recessionary pressures. So anchoring long-term inflation expectations at the 2% target is absolutely critical for the Federal Reserve's monetary policy, but current inflation and what it is that they are seeking to achieve may not necessarily be 2%. It may seek to achieve inflation that's moderately above 2% for some time to make up for the fact that they were failing to achieve the 2% target. That's what we are experiencing today. And there's no reason to believe that they are going for a 2% target like 99.9% of everybody else out there seems to believe. That is not what they are doing. And by thinking that, you're thinking inappropriately to what it is that the Federal Reserve is attempting to achieve. Again, internalize this speech for itself. You got Ben Bernanke's speech, you got Powell's speech, you got John Williams' speech. This is homework. This is not easy. This is not easy. Like, I can give you as much as I can give you. I've broken these things down in the member-only live streams. Right? That's why I do these member-only live streams. We do these speeches one at a time. We take long considerations of all the things that they say, and we have a discussion about it. We internalize it on the moment. Once we leave that video, we now have it in us that we can now view within the economy. When we read the articles, we are considering the things that we have read and seen coming from the Federal Reserve's strategies and their policies. See, this is why it's so important to be a member of the channel. I mean, I sell it for $1 a month, guys. It's not like I'm trying to make a bunch of money off of it. If I was trying to make money off of it, I would actually, be selling it for like 10, 50, whatever, who knows, right? I'm doing this to try and promote the ideas of what it is that has taken place within the monetary policy so you can do the best decisions for yourself, right? It's intuitive decisions. Like, these are not something that you are going to get from a financial advisor. You're not going to get it from another YouTuber out there. You're not going to get it from a president who is elected. You're not going to get it from that. You're only going to get it from the decisions that you make every day. And if you have not subconsciously internalized this information, you are going to be you're going to pay the consequences. That's it. You're going to be left at the guidance of political officials or whatever, society, has to offer you or whatever. I don't know. Like, I don't know what you'll be left at, but me personally, I'm diving into this stuff because it allows me to then understand and make decisions for myself that are unique to me. Right? Because that's another thing. People say, well, what am I supposed to do? I don't know what you're supposed to do. I don't know who you are. Right? I mean, even if I did know who you are, I don't know you personally, like to know what it is, your wants, desires, and, pleasures that you need in your life. I have no clue of what any of that is, That's why you have to make these decisions for yourself. And since nobody else is talking about this stuff, at least in this way, I don't know what to say. You're going to be, you're on your own, right? We're all on this on our own. Like, I really feel like we are a very small group, like tiny people who know this particular information outside of the central bankers themselves, right? Because, like, think about it. Like, how many people discuss the things that I talk about to the level that I do? I mean, this is the deep end of the pool, diving deep into this stuff, trying to explain it to the average everyday dude. Right? Nobody's doing it to this kind of extent. There's people out there who talk about all kinds of wonderful things as far as the political atmosphere and the world, geopolitical issues and all that other stuff, man. I'm talking monetary policy, what it is that the Federal Reserve's doing, and the decisions that you can make based on those interest rate adjustments. Because that is more impactful than anything else out there. Yeah. It's crazy to think that 12 people have as much influence over the world, over everybody in the world that they do. The 12 voting excuse me, the 12 voting members, the 5 alternates, and the 2 whatever they are advisors, is 18 people who conduct monetary policy that has impacted the entire globe. I don't know why more people don't focus in on their, like, every word that they say should be scrutinized. And people don't even look at this stuff, you know? And it's just like, it just blows me away. Like, people are like, no, you need to focus in on all this stuff that's just a bunch of things that don't make any difference in your life, right? And I'm telling you, no, this makes a difference in your life. These people impact every single person on the entire planet, and nobody is listening to them. Like, not like this anyway. I mean, think about it. How many people are saying the things that I talk about? No, like nobody, you know? All right, let's check out these super chats. Thank you, everybody. I really appreciate all the support. I really do. Thank you, PM Galleria. We got Redazon with the $4.99. Cart is pulled by horse. Placing cart front of horse is a phrase. Is priced by contemporary economists the horse or the cart? Different for classical. Redazon always has these deep questions I have to think about. PM Galleria, hate the feds, but that is what Trump is hinting at in his speeches. Your thoughts is right, in my opinion. Trump likes gold and crypto, gold-backed central bank digital currencies. I seriously doubt it, PM Galleria. And the problem with that is that Triffin's dilemma and Gresham's law would end up leaving us in Cantillon effect, like the whole thing, right? Like all the 4 economic theories, but especially like Cantillon effect, Triffin's dilemma, Gresham's law, you put those into play in our current economic environment. Like you go back to a gold standard or a Bitcoin standard, anything that has a limited currency, almost instantly. Don't let Trump do that to you. Right. I mean, if you're prepared for it, I mean, if you're loaded up on Bitcoin and gold, yeah, I mean, let's do it, man. Like I'm cool with it because I'm in a position in which that I think I would excel in that environment. But the majority of the people out there are going to suffer the consequences. It's going to be freaking a nightmare, right? I mean, it is not going to be good. But like me personally and anybody else who's loaded up on gold, silver, and crypto would just like it would own the world, right? I mean, there's like owning half a Bitcoin in a Bitcoin standard world. You know how like I would be a king. Like that doesn't know. Well, like that's not feasible. That's not right. I ain't gonna expect that, and I don't think that's gonna take place. So I doubt it, right? I very seriously doubt it. Now, will it could it go to $100 million? Well, sure. I mean, why not? Like, I mean, who knows what could happen, right? There's not going to be that much Bitcoin out there, and really a lot of it is gone anyway. So, yeah, I mean, the chances that it could go to an incredible level is very, uh, is very possible. Okay. So did we finish Powell's speech? I think we did, right? Okay. Now, something that I found very, very interesting. Let me see, that's page 5. Did I write it? Okay. Is that, let's see, did I get the, I'm sorry, guys, I didn't even read these questions. Okay. I have to think about Redazon's questions and before I can really, answer them here. But I think it's like, probably more of a statement than it is a question. All right. The Fed, Central Bank. Okay. Low Church Crusader. Thank you very much, PM Galleria, too. for the $5. And if you guys haven't checked out PM Galleria's YouTube channel, he does these great artworks where he incorporates silver right into the art. He sent me this really awesome painting that I actually have hanging behind my desk of well, it was back when I was driving the Toyota, I think. But anyway, it's the cars, the interior, it has the rear view mirror, it has dice, and then the dots on the dice are actually textured with silver flakes, and so there's silver all throughout the painting and stuff. So I forget how much was on there, but he said it was like an ounce of silver, and I think there's a little bit of gold on there too, if I got it right. So it was a really cool piece. It's actually it's a pretty cool one because it's a conversation piece when people see it. So thank you, PM Galleria, for sending me that too. That's awesome. Let's got another one here. Let me go read that. Low church crusader. Trump's statements on interest rates is a credible threat. He likely knows it. He would help raise inflation expectations. Still voting for him though. Hey, I don't blame anybody. Like, I mean, you should vote for whoever you think is going to be the right individual, and I, certainly wouldn't blame you for voting for Trump. Um, Considering what we have experienced over the last few years, I just don't put a whole lot of hope or expectations on any of it. My hopes and expectations flew out the window back when Ron Paul was running for president, and watching the Republican Party pretty much blackball him out of it, I was just very frustrated with them. I was somebody who was very much on their side and supportive and listening to even the things I didn't agree with. I'm like, okay, well, I'll accept a lot of this stuff. And the and when that happened, I'm like, you guys lost my trust. That's a problem because once you lose my trust, I don't want to give you any considerations anymore. And so I don't, right? I mean, it's just like that's it. Like, I mean, I'm like, okay, well, if you don't want to go along with the things that are in here that, confine you to the limitations that have now excelled you to the levels that you are at, I mean, if you don't want to do that, because I understand it's going to be self-inflicting pain and misery to you, but this is the things that we were based on that led us to the levels that we are at, that we have now are slowly like deviating from, and people are wondering like why it is that we have such issues within this country. And it was just like because people vote for people who don't understand, or you're voting in a way that you don't understand because of the failure to understand the things that are within this Constitution. Like, it's just, I, I don't mean to have like an incoherent babbling about it, but basically, if they're not constitutional, they are un-American. Why would you vote for that? And if they are not voting for the Constitution, they are essentially voting for the tyranny that we are experiencing. And the reason why they're voting or going along with it is because they separate themselves from the poor. And so, again, like, I have no respect for any of that. I am now on my own trying to figure out what it is that I need to do with what they say is the most appropriate thing for you. And it was just like, no, they don't know. They're done, right? I don't trust them anymore. It's just whatever. Okay. The heart of the credible threat theory is the jawboning, signaling forward guidance, the gold machine, right? And now, how it is that their words have more impact on the economy than just about anything else out there. And so, when I think about some of the things that we are experiencing, even just recently, right? Even just recently, we have experienced some of the ideas that the Federal Reserve is going to do into the future, impacting the markets dramatically, like dramatic impacts to the economy. We've seen it happen literally over the course of a few days, this dramatic swing and bounce back, and it was just like all based off of this perception of what it is that's going to be taking place in the future. And again, this is the heart, the essence of what it is that the Federal Reserve is needing to do in order to guide monetary policy. Remember, the gold machine, they talked about quantitative easing and all the other stuff that comes from it, right? Because it's the perception of what's about ready to happen that has more impact than anything else. Okay. Um, it was thought that greater transparency. This is Jefferson's speech. This is a really good one. It's communicating about monetary policy. This is, again, we did a breakdown of this particular speech in its entirety and the members only live stream. If you haven't become a member of the channel, it's almost critical to understanding the Fed's monetary policy. If you are not reading these speeches yourself entirely, it's almost critical that you would have to become a member of this channel in order to internalize this information. Because if you are not internalizing this information, you're left up to the guidance, the communication conduits that they are channeling into you, that they are doing on purpose. We also did a mainstream or a members only mainstream, a members only live stream about that too, right? How they literally target people and direct that information into those people in a particular fashion because they wouldn't have received the information anyway. So think about that. That is like literally like directing brainwashing right into people. And this is part of the Federal Reserve strategy, like openly admitted almost, right? I mean, for the most part. They called it a study in the review, but I mean, they were doing it on purpose. Okay, well, you don't know, but how could you not do it on purpose if you know how to do it? Right? Like, that's just how, Anyway, moving on. All right. First, it was thought. Oh, when did Jefferson gave this speech on what day? May 13th, 2024. So this isn't even that long ago. This was just the other day, really. Okay. So we understand the gold machine. We understand that, talking about how a guy can invent gold with little cost or energy or anything going into it would pretty much guide the markets into lower gold prices even before the guy produces a single ounce of gold or even has the machine to do it. The credible threat alone would be enough. Okay, so this is the forward guidance signaling communications, the transparency, that's another word that they'll use, right? All that stuff is all about how it is that you are understanding what it is that the Federal Reserve is up to in order for them to guide you into the appropriate direction for monetary policy. Because again, the interest rate adjustments don't work, right? We know this from the failure of or the falling of inflation or the deflationary scenario that needed to be prevented at all costs. And when it didn't happen, there was other ways of doing it. This is it. Right? This is it. Again, Ben Bernanke's speech, the low neutral interest speech coming from Williams, Powell's speech given at 4 years ago, August of 2020, and now here we are, Jefferson talking about the communications. First, it was thought, and again, I'm not reading the whole speech. This is on page 4 of the PDF. Links are down in the description for all these things. First, it was thought that greater transparency would demonstrate the Fed's accountability to the public and safeguard its public independence. Second, there was growing appreciation in economics profession that clarity about policy could improve macroeconomic outcomes. Expansion became a focal point, or I'm sorry, expectations became a focal point in academic and policy circles with the emergence of new Keynesian models in the 1990s as a framework for monetary policy. So think about it. Now, for those of you who don't know what Keynesian economics, like I'm sure a lot of you, or most of you do, but basically, Keynesian economic model is what we are experiencing right now. Like we are living in a Keynesian economic model where you have like government influence going into government spending during downturns and a central bank authority that can print up money and do all this other stuff. This is like Maynard Keynes' like idea of how the economy should function. The other way is like an Austrian economics, I guess, would be like the counterpart to this, where you have more sound money and like free market forces and stuff like that without the government interventions and all that other stuff going on. So Keynesian economic models is essentially what we are experiencing as far as an economy today. And even like George Bush said it, like, we are all Keynesians now, right? And so anyhow, but you have your own personal economy and you don't have to have your economy be a Keynesian economy. Your economy can be very much free market gold standard, style economy, because that's what you have done for yourself and position yourself. However, when you're operating out here in the rest of the world, you're operating in a Keynesian economics model. All right. In these models, aligning the expectations of decision makers in the private sector with those of the policymakers produce superior economic outcomes. Isn't that fun? All right. Let me read that again. In these models, aligning the expectations of decision makers in the private sector with those of the policymakers produce superior economic outcomes. Mike Woodford, one of the developers of the new Keynesian model, put it this way: not only do expectations about policy matter, but very little else matters. Right? And we're finding this to be true today. Right? We're finding this and we see evidence of it just recently. Like the Federal Reserve made zero changes to their monetary policy, but look at what's taken place within the mortgage market. You watch the mortgage rates come down. You watch the stock market sell off and the bond market all of a sudden rally. People got fearful in ideas that interest rates are going to adjust. They started changing to that or adapting to that change before it ever happened. And it starts to impact the economy in a very serious and profound way. Again, one of the developers of the new Keynesian model put it this way: not only do expectations about policy matter, but very little else matters. Very little else. And this is what we're finding. Like, this is how, I mean, I've been talking about this for months. This speech just came out just a couple of months ago. I've been literally talking about this for years. Right? And here it is. This is like the information that they do not put out there on the mainstream. They do not want you to know this. If you knew this, it would fail. They would fail. Like, you want to destroy the Federal Reserve, you have to know this stuff. Right? And even at this point, it's not a matter of destroying the Fed. It doesn't matter. Like, don't even worry about destroying the Fed. That's not the point. Right? Like, I don't even know why I would even bring that up. That's not our goal, is to destroy the Fed. That's not it. Let somebody else do that. That's their problem. Our issue is to figure out how it is that we survive in this. That's our issue, right? And that's what we're doing today, is figuring out how to do that. Communicating a policy strategy and following through on it increase the credibility of the central bank and therefore its ability to steer expectations in the economy. Clear communications also help stabilize the economy and keep inflation closer to target, because when the Fed clearly articulated reaction function, financial markets would be able to anticipate the likely future course of monetary policy and help the central bank do its work by affecting long-term rates and other asset prices. It's so important. It's so important to understand. All right. I'm going to leave it at that on that speech. I'm not going to, because we're an hour and a half into this. I don't want to make this forever, because I want people to be able to share this thing and actually, have it with people and say, hey, listen, this is the real monetary policy coming from the Federal Reserve, and these speeches are breaking it down. I'm going to give you, these are bonus right here, this Jefferson and Bowman. Like, I would definitely read through the Jefferson speech, because that one is very telling about the communications. Like, as far as like the gold machine, that speech really kind of like, breaks down the gold machine idea really, pretty prevalently throughout it. Okay, so this is Michelle Bowman, Perspectives on Monetary Policy and Bank Capital Reform. This speech was given June 25th of 2024. And there's one section in here that I just kind of wanted to read from. Did I highlight it? Oh, tell me. Yeah, okay, great. Okay. So, oh, wait a minute. There was something else on Jefferson's. Let me see. Was it up there? Sorry, guys. I should have done this a little. Okay. No, there's one more on Jefferson's speech that I wanted to talk about before I let that one go. And yeah, I should have kept reading here a little bit. Let me go back to Jefferson's speech. During the tenure of Chairman Bernanke, there was another burst of innovation in the way monetary policy was communicated. In 2007, the first SEP was published uh, to convey systematically the economic outlook of the FOMC participants. What is that? Statistics on economic projections or something like that, or I forget what the SEP, but it's something about economic projections. Anyway, to convey systematically the economic outlook of the FOMC's participants. So they were publishing this to give people the idea. Like in 2007 was the first time they did this, knowing that they were going to have to develop these communication styles, right? In 2011, Chairman Bernanke started holding press conferences after every FOMC meeting. So again, not only did they have these economic projection reports, but then they started holding these press conferences. And again, this is the forward guidance. They were developing the communication styles for delivering the message, right? Like they didn't do this before. In fact, if we go, hold on. In 2011, Chairman Bernanke started holding press conferences after every FOMC meeting. In 2012, the Fed adopted an explicit inflation targeting of 2% and started publishing individual FOMC's participants' view on the appropriate path of the Fed funds rate, now famously known as the dot plot. During these years, Loretta, in her capacity as the research director of the Federal Reserve Bank of Philadelphia, contributed to ongoing work on communications in collaboration with policymakers and the Federal Reserve Board staff. You see this? They were developing it. They were trying to figure it out. And see, and it's important because let me stick on Jefferson's speech here because I think this is important to understand. See, prior to them communicating so well, they thought it was more important to keep it secret. In fact, they were of the idea that they should shock the markets, and they were very misunderstood in a lot of ways. Let me see if I can go back. See, this is a pretty good speech. I mean, I don't want to go through the whole thing again, but the member-only live stream that we did on this, I think is really, really good. You guys should go, if you haven't seen that particular one, go check that one out. The public will have a better understanding of monetary policy when policymakers are clear about their policy goals. Those aspects of the economy monetary policy can and cannot influence the economic information that influences their forecast and policy decisions. She went on to explain, that was Mester in 2018. She went on to explain that when policymakers are systematic in their policy responses to the changing economic conditions, the public will have a better idea of how the committee's monetary policy is likely to change in response to the anticipated and unanticipated economic developments. In particular, she noted, with such knowledge, households and firms can plan better. They can make better savings, borrowing, and investment and employment decisions. The view reflected in Loretta's words seemed commonplace now, but it wasn't always so. When Loretta joined the Federal Reserve Bank in God, why do I keep doing that? It's so weird. That's like my dyslexia that comes out, right? In Philadelphia in 1985, the FOMC didn't disclose its interest rate decisions. So back in 1985, like they were saying, when she first joined, they didn't give interest rate decisions. They didn't talk about it. They were like, hell no, we ain't going to say nothing about this thing. We got to shock the markets. It didn't even report that it had made a decision. In 1981, Karl Brunner, the Swiss monetary economist, called central banking an esoteric art and lamented central banks' inherent impossibility to articulate its insight in an explicit and in intelligible words and sentences. That was his quote. Let me quote that again. Inherent impossibility to articulate its insight in an explicit and intelligible words and sentences, meaning they couldn't even talk about how their monetary policy works. Like they couldn't even do it. At the time, central bank's wisdom dictated that monetary policy makers should say as little as possible. Like, they don't want you to know anything about it, right? As little as possible. Some research of that vintage tried to rationalize the, quote, secrecy through the notion that monetary policy would be particularly effective if it surprised the markets. See, this is the way that they used to conduct themselves. This is how most people are used to the Federal Reserve being, right? Is this classical form of understanding it, that they would use like these interest rate adjustments to guide the markets. They found that if they communicated about it, they would get better effects out of it. In fact, they found that it was more important, right? What did he say? Mike Woodford said one of the developers of the new Keynesian model put it this way: not only do expectations about policy matter, but very little else matters. Right. Okay. And I think that's so true. Like, the more I think about it, the more I look out there at the economy and then the stuff that I'm seeing and hearing and obviously is taking place. I believe like very few people truly understand what it was that the monetary policy was trying to do at the time. Like, most people get it wrong, and getting it wrong is to the Fed's advantage, right? I mean, you see it now. Like, once you start hearing this, once you think about it a little bit more, you start to see it. And again, this isn't me. This is their own words. This is them. This is their own documented words. Okay, and all you have to do is just go and read the speeches, and then you'll see it just the same. All right. So, something that I found interesting here is in Michelle Bowman's speech. Right, this is that recent one that was given, because she is very prevalent within the monetary policy speeches that are given. And she said something in her speech the other day. What was this? This was June 25th. So, yeah, literally just a few months ago, a couple months ago. She was talking in this. Let me read back a little bit so that we get a little bit more of a understanding of what she was saying. Okay. Inflation in the U.S. remains elevated, and I still see a number of upside inflation risks that affect my outlook. First, it is unlikely that further supply-side improvements will continue to lower inflation going forward. So that's important to think about, because it was the easing of supply, right? The supply chains, like the opening up of the economy again and allowing the free flowing of material to go through without all the restrictions and whatnot. This was like freeing up the supply side of things. Well, that has pretty much done its course. Like, as far as what we are going to get from the supply side has now provided itself. Like, this is it. And I knew it wasn't going to come back in a significant way, because why would it? Like, if you have elevated interest rates damaging the consumer, why would, like, manufacturers, suppliers, the wholesalers, all these people, why would they invest into an economy that is getting a damaged consumer? That wouldn't make sense. So the supply side has run its course. They're done. Like, the suppliers have supplied, the manufacturers are manufacturing. This is it. This is about as much as you're going to get. And I knew it wasn't going to come back in a profound way. Like, I knew that it wasn't going to alleviate all the inflation because, again, of what I was saying. Like, why would you invest into that? Why would the manufacturers do that? They wouldn't. And essentially, they didn't really. All right. As supply chains have largely normalized, a labor force. Let me see. Let me go back here again and read it. First, it is unlikely that further supply-side improvements will continue to lower inflation going forward, as supply chains have largely normalized. The labor force participation rate has leveled off in recent months below pre-pandemic levels, and an open U.S. immigration policy that added millions of new immigrants into the U.S. over the past few years may become more restrictive. So those are some of the issues. Okay, geopolitical developments could also pose upside risk to inflation, including the risk that spills over from regional conflicts that could disrupt global supply chains, putting additional upward pressure on food, energy, and commodity prices. There is also risk that loosening in financial conditions since last year reflect considerable gains in equity valuations. In addition, fiscal stimulus could add momentum to demand, stalling any further progress or even causing inflation to reaccelerate. Now, I think that's really like a very funny, tricky statement that was made right there that I don't think a lot of people would really have got caught, right? Just hearing it doesn't really seem very like, I don't like doesn't seem very profound, but really there was something said there that is very profound considering that the Federal Reserve has not really conducted themselves any differently since they have raised interest rates and peaked them out. So ultimately, the easing in financial conditions, when did that happen? Like the easing in financial conditions is when the Federal Reserve lowers rates, right? Like we're talking about that in September. Like that's the easing in financial conditions come September. What is she talking about when there was the risk that the loosening in financial conditions since last year? Well, why when like okay, I'm thinking back. When was there an easing in financial conditions? I don't remember that taking place. Like as far as I know, it's always been restricted, but she's talking about this easing in financial conditions. Oh yeah, the dot plot, right? Who talked about the dot plot? Old Jefferson here. Talked about it being one of the communication styles that they can use in order to get the information out there to the people. Remember when the dot plot came out at the end of last year with 7 rate cuts predicted in the future? Almost guaranteed. The Fed is committed to it. Done pivot. Everybody was jumping on the idea of it. What happened to financial conditions? They started to ease. There is also, again, let me read back and read it. When we incorporate the idea of the credible threat that came from the dot plot experience, which is a communication development that came from the new Keynesian model in order to deliver you the information so that you would be guided in the market, right? That's what occurred at the end of like towards the end of last year that eased the financial conditions, but yet nothing within the Federal Reserve changed. Nothing within their monetary policy had changed. The only thing that had changed was the people's expectations of what was going to be happening in the future. There is also the risk that the loosening in financial conditions since last year reflecting considerable gains in equity valuations and additional fiscal stimulus could add momentum to demand, stalling any further progress or even causing inflation to reaccelerate. Well, isn't that interesting to think about? That dot plot actually created an environment within the economy that loosened financial conditions considerable causing reflecting considerable gains in equity valuations. Their words did this, not their actions, their words. She goes on to say in this speech, my baseline outlook, this is her baseline outlook. So our baseline outlook is this is what I anticipate is going to be taking place into the future. All the stuff that we have read, all these communications talking about Ben Bernanke preventing deflation and then what it is that they need to do if those prevention of inflation fails, they have to go into the quantitative easing and all the asset purchases and all the other stuff. Right? That speech is really good. He actually goes into talking about buying foreign assets in it too. So you should go read it. Right? Again, moving into neutral interest rates being a problem, dropping interest rates down to the lower bound of zero, failing to stimulate the economy, doesn't work anymore. All right. We go into Powell's speech talking about how they need to figure out, since they were persistently under 2% inflation for the previous decade, that they need to run inflation above 2% for some time to come up with an average inflation rate, which they have no mathematical formula to figure out. Right? We figured all that again. Ben Powell's speech from August of 2020. Links down in the description, right? This is how the monetary policy is stacking up. This is what we can expect to experience. All these people who have, like, whatever concept that is coming from the mainstream media that's deviated from what it is that I'm talking about is wrong. Like, I don't mean to be arrogant about that, but it's not me who's saying it. It's the Fed who is saying it. These are the documents saying it. Right? And part of this is mind control. Literally, it's the biggest gaslighting in history. But we don't have to fall for it. We understand it. We know what's taking place here. And as everybody else thinks we're nuts, fine. Let them think we're nuts. They're the ones who are now being mind controlled in this major psyops game that is taking place. What is her baseline outlook? Let's look again. Michelle Bowman, FOMC, major contributor to the monetary policies strategies. My baseline outlook continues to be that the U.S. inflation will continue to the FOMC's 2% goal. What is the FOMC's 2% goal? It's a 2% average inflation rate over time, with monetary policy having an appropriate position of moderately above 2%. That's the Fed's goal, right? A 2% average inflation rate over time. It's not a 2% target. They don't go for the target. We know this because of the speeches that we have read, not because I'm making it up, right? But because they said it. All right. To return the FOMC's 2% goal, with the target range of the federal funds rate held at its current level of 5.25% to 5.5% for some time. Very important. Again, now whether or not this is the future or this is the outcome, this is what her baseline thoughts are. That the United States inflation will return to the 2% goal. It will return to the goal with the federal funds rate held at 5.25% to 5.5% for some time. This is a recent speech. This was given in June. Okay. See, understanding what it is that they have been trying to do for the last 20 years. This is not something that they are flying on the seat of their pants. They're not going to sit there and go like, okay, like maybe we'll figure this thing out here next month. No, this is a well-orchestrated, well-thought-out, well-documented plan, right? And here's the speeches. I mean, you can go and probably dig up even more profound information that it goes even deeper than this stuff that I have shared with you today. But these speeches, the ones that I have linked down in the description of this video, if you go and read through these speeches, internalize all the information, don't just blast over and say, God, this is boring, right? Think about it, internalize it. Think about the stuff that is being said, right? This isn't a matter of just entertainment, right? I try to be entertaining and funny and, all that other stuff out here at times. This is critical for your survival. This is critical for your outcome, for your family, for your business, right? Most people don't get it. They have no clue. Like, literally, you could ask 1,000 people. That's how rare this information is. Go out and ask 1,000 people what the neutral interest rate means to the Federal Reserve's monetary policy, right? Ask one question. What does the neutral interest rate mean to the Federal Reserve's monetary policy? Most people would have no clue of what you just said. Think about that. 1,000 people would have no clue of what that means. Right? That's how rare this stuff is. See, that's how valuable this information is. It's not stated out there on the mainstream media. There's not a single article I found that would explain any of this stuff that I had just explained over the course of the last hour here for you. All right? And so it is hard. Like, you think about it. We just spent 2 hours breaking this stuff down and we just scratched the surface of what it is. To internalize this information truly, you have to now think about all the little pieces of everything that I had just said. And you have to think, man, this is deep topics that you could literally research hours and days and weeks upon, each one of these little tiny topics that make up this overall video. That's what I had to do. That's why I'm so adamant about it. It's why I'm so, I don't mean to, and again, like I guess it kind of hit me hard to hear that, I sound arrogant and cocky because I don't want to be that way. Like that's not the way I'm trying to be. But I am very confident in my understanding of what it is that's being said here because of what it is that they are saying. Like I don't even like all I have to do is just remember what they said. Like I don't have to think about like how, the strategy. There we go. Like I've done, figured it out through their own words and broken it down to just a handful of speeches that you can read. And if you truly take it in, it's a lot of work, but if you truly take it in and internalize it, you'll understand it too. And then they won't get away with the stuff that they're, at least not get away with it with you. And then you'll like listening to these economists out there on TV talking, and you're like, Jesus, I'm smarter than they are when it comes to this monetary policy. Like they don't know anything. Like that's why I gave up on a lot of TV, watching like news and stuff like that when it comes to this because it is pure, pure, pure propaganda. There is nothing that comes out on that TV or a news media outlet that isn't some sort of mind manipulation. I cannot find it. Like literally every single article I have ever read is a mind manipulation tactic. And that's what's scary about it. Is it's like, man, that's that prevalent. Because if it wasn't, you would be finding articles talking about the neutral interest rate. All right. You'd be finding articles talking about, the average inflation rate over time and how there's no mathematical formula for figuring it out. And we would all be discussing that, not a 2% target. The 2% target doesn't even exist. It's literally like they're like, hey guys, look over there. And everybody will like, oh yeah, and then let's talk about that. Look over there and talk about that. Meanwhile, over here, all the stuff's happening. And that's literally what's going on every time we read a mainstream media article. They'll touch on a lot of this stuff. They'll touch on it, but they don't present it out there like they are to the other central bankers. And that's what these speeches are. They're communications to the other central bankers. Not to the, I mean, the public can go read them. We get access to them all day long. Nobody does. Yeah. So thank you all for being here. And thank you for all these super chats. We're loaded up to like $51 in super chats. Let's go check some of these out. All right, man. Where is the news one? Bird, Simon, it's none of my business, but have you ever voted? I never have, and I don't feel I have to. Yeah, I vote. And I sound like I don't, but I do. I do vote. Is the in this business to be successful, you have to be either first, smart, or cheat. We don't cheat, and it's a whole lot easier to be first. Sell 2%. Target is. Yeah. You guys are awesome. Thank you so much for all these super chats. Let's go check out some of the live comments going on right now. Okay. Can you give me, here we go, deplorable Kulak. Can you give me an example of an event happening that we could use your information to take advantage of the event? I don't understand how you're supposed to do that when each and every single one of us has our own economy to deal with. Like, how do you take advantage of it? Did you buy the dip? I mean, that was your advantage. Did you like, are you needed lumber? Like I would buy lumber right now. I mean, I don't know what it is that you have going on in your life that you need. I dollar cost average, so it doesn't matter what's going on in the economy. I just buy a little bit all the time. Right? I pay myself first. I buy a little bit all the time. Try to stay out of debt, like I don't know what it is that you need to do to take advantage of this information. This is something that I get asked all the time, right? This is probably one of the things that I think is most common when people are going into their studies is they are really looking for somebody to give them the answer. Like there is a magic secret. Okay? The magic secret, the magic secret video that you're gonna watch that finally gives you the aha. It all is clear now. I know exactly what I'm supposed to do with my money. I know what I'm supposed to do for business. I know what I'm supposed to do for life and retirement and all the other stuff. I finally watched that 10-minute video that gave me the aha, right? It doesn't work like that. It's not ever going to work like that. The universe doesn't provide you with abundance I mean, I guess it could by accident, but then it generally takes it all away. So like you can get it through lottery or something, like winning it, but that's generally not how you have a sustained amount of abundance around you in your life, right? The way that comes about is literally feeling it and understanding it on how it is that you are not living a like limited resources or lacking resources, right? That's where most people end up suffering the consequences. It's a mindset that you have. And so with this limited and lacking, you feel like you lack the information to make the appropriate decisions. You don't. You already have the appropriate decisions within you because nobody knows you like you. You know you, right? But what you're failing, or what not, maybe not you personally, but what the failure of a lot of times happens is the lacking of understanding that's coming from the Federal Reserve and their ultimate outcomes, like, or their goals, or what it is they're attempting to achieve. And so we start reading and looking at all these different people out here who have all their different opinions about what it is that's going on. And then that leaves us really questioning, man, what's our outcome going to be? Right? I don't know. I don't get it. I don't know what I'm supposed to do. This person says this, right? And then pretty soon you're like, oh shit, I don't know where I'm supposed to go or what I'm supposed to do. And that's the reason why you have to then internalize the information for yourself. So when you hear those people, you'd be like, whatever. It's just like, yeah, I agree. I don't. Whatever. It's just like you're you're independent in your own thoughts and actions, right? You understand the Federal Reserve for what it is that they're doing. When this person says they're going to destroy you with hyperinflation, you better believe it. You better do, and you're going to be like, ease up, bro. Right? I got it. I'm okay. I mean, I understand. Yeah, inflation is hyper. I understand, right? I understand what you're saying, but I also understand Triffin's dilemma, Gresham's law. I understand what's going on with, Cantillon effect. I get it. I know why there's this separation between the rich and the poor. I know why it is that a good job sucks now. I know why it is that I have to try ever increasingly more with side hustles, which are very prevalent within the economy, in order to compete to get an apartment. Right? That's like, I mean, understanding it for what it is, you don't question it anymore. You just know. You're just like, hey, man, this is the problems that we exist. And they're not even really problems. It's just the way it is. And we just have to deal with it. Right? I mean, are there problems or are there solutions? It's just like there are no problems. There are only solutions. Just like there is no lack, there's only abundance anywhere, no matter what. You know, but unfortunately, because we believe in the lack or scarcity mindset, it provides us with that. And we see the lack and scarcity. And all of a sudden, we have an abundance of lack and scarcity, not realizing that it's always about abundance. And it's so hard to internalize that on its own. And it's not like me doing some crystal grip and hippie talk when I do that. That's the understanding that I finally had to come to realize why it is or where it is that I had moved from to and gone to with my YouTube channel and everything in life. All right. It's all up in here. It's the way you think and the way you feel that's doing it. Not an external. It's not external. It literally isn't. There's nothing on the outside that is going to change that's going to do you anything for you. It's all inside. And it's all in here. Right? It's all in the way you're thinking. Straight up. No. You got any questions, statements? What do we got here? In general, message is I have a belief that the Fed is doing this, but I don't know how to take advantage of it. But you do. That's the thing, deplorable. You do know how to take advantage of it. You just don't realize it, right? And in fact, by internalizing it just straight up, like if you know some of these things, when it comes time to buy a car, like what you're looking for is something that's going to put you in a position in which you can say, aha, I did it, I'm done, right? But that's not the way it goes down. You're never done, ever. There's never a done. And money, like the a lot of times people think it's money, like you got to have all this money on hand. If you have all the money, then you're done. That's not it either. Like it's not about the money. It's not about the money, and it's not about like an end outcome goal kind of thing, right? Like for a lot of people, they'd be like, man, once I get to $1 million, that's it, I'm done. No, you're not, right? You won't be able to hold on to it. If you get there and you have 1 million and you say, that's it, I quit, then you're probably going to end up losing it again. So once you've got $1 million, now the work begins because now you have to figure out how to keep it, right? So there's nothing, it's nothing but work nonstop. And ultimately, no, like a million, like me with $1 million isn't the same as you with $1 million. We're not going to be in the same position. Things that change in the economy would mean that I would have to do things differently from you, even though we both have $1 million. It's understanding it for yourself. That's it. Like it's, I don't like, I don't know how else to explain it other than by internalizing it, you will naturally just be making the right decisions. It's like, I guess it's like somebody saying, hey, man, how are you supposed to be good with women? It's just like, I don't know, be confident, be funny, you know, be successful, be good looking, don't stink. Like you have all these lists of shit that you have to come up with, but ultimately, right, it's an energy inside that you connect with this other person. It doesn't have anything to do with all the external shit, right? It doesn't. It doesn't have anything to do with it. Money, success, life, all that. It's all, again, right up in here in the way you're thinking. You can change all you want. You can make all the money. You can wear the nicer clothes. You can put on the fancy perfumes. You can do all the stuff. It doesn't change anything about who you are inside. And that's what's really needing to change if you want to connect with the world. Right? So, again, like, it's all about being aware. Okay. You study the Fed. Can you tell us what the real inflation rate on housing is per year? Why? I don't know. No, I can't. Okay. Okay. Opportunity is everywhere, just like women. Yeah. I mean, well, there's 6,000, like 6 million people. There's 6,000 people in your like immediate vicinity, I'd imagine. Like, there's all kinds of stuff. So facts only. All right. Only hold the dollar when it is good time to buy cheap. I agree with deplorable Kulak. I am not sure what actions to take as a result of this information. Okay. Well, how about this? Okay. How about this? This is a good way of looking at it. You don't know what actions to take. Let me see. Do you now, honestly, after receiving this information, sitting here, internalized it, thinking about it, and then going up, like opening your eyes, and then viewing with this information internalized the mistakes that people are making on account of not understanding this information? Can you answer that? Like, I mean, can you honestly say yes? Like, I have internalized this information. I look out there and I see people who don't have this information making mistakes, believing that, there's certain outcomes coming from the Federal Reserve that are completely hypothetical, but they're taking serious actions on account of believing that it's real. Can you see that? Like, is that something that you could honestly say yes? Well, then think, I'm not making those mistakes, because you would very well be making those same mistakes if you didn't internalize this information. So think about it in that fashion. Like, you don't know what actions to take. Well, maybe it's the inactions that is saving you. All right? Just saying. It's maybe not, it might not be what it is that you're looking for, but that's also to understand that by looking for something that is going to guide you, like, and that's, I mean, I don't mean to put that because I feel like I have a huge ego that I'm trying to deal with, right? But an ego is basically saying it has to go this way. You have to give me information that tells me to do this, right? That's your ego telling you that. Let that go. Say, I'm just going to internalize the information and then it's going to guide me for whatever it is that it needs me to do. And maybe it's just preventing you from making bad decisions. It may not be telling you good decisions to make. It just might be preventing you from making bad ones. Right? I mean, that could be very a real possibility that's coming from this information. But if you have an ego that says, no, it has to tell me to do this, this is what I want the information to do. Well, you're trying to manipulate it. You're a manipulator, yo. That's not the way this works. That's not the way any of this works. You can't tell the universe how it is that you need it, right? Because the universe isn't going to give it to you. If you need it, that's a need. A need is a negative energy. That's going to repel. You're not going to be able to find it. In fact, you won't get it. You'll be sitting there wondering where it is. Again, internalize it all, let it all go, and just live your life. Just live your life with the information, and you will just naturally be going. If you need the information to do a business, you guess what? You're going to be stuck with an ego that says you need to give me the information so I can do my business. Right? Why have that? Why have that ego? Let it go. Just go start your business, man. You don't need somebody else to give you permission. You don't need somebody else to tell you that the world exists in this particular way that says that it's okay or not. That's not up for them. That's not up to that's not up for them to tell you. And so just take in the information, let it go, and go live life. Right? That's what you have to do. And the moment that you say, no, it needs to tell me this, think about that. If that word comes up, I need it, or if it needs, or need is negative. Negative energy is repelling. You will lose whatever it is that you need. If you don't believe me, this energy exists in every single thing. I don't care if it's money, if it's relationships, if it's a career. I don't care what it is. This energy exists in every single thing, right down to this cup of coffee that I'm drinking. You don't believe me? Chase a dog. What happens? The dog will run. Run from the dog. What happens? The dog chases you. This energy exists in everything, no matter what it is. Right? What happens when you want the dog? Dog, come here, dog, come here, dog, come here. Right? Dog doesn't do it. Dog's sitting there, it's like, God, shut up. Right? That's what the dog is thinking. But if you leave the dog alone, what does the dog do? It's like, hey, pet me, come on, man, let's go, let's play, here's the ball, let's go, like, have fun, right? Once you understand the energy, then it's just like everything starts to make sense. It's like that same energy. I don't care if it's interacting with the dog, or trying to get a career, or doing a job interview, or talking with a girl, or figuring out what the next business deal is going to be, trying to figure out how to whatever. It's all the same. It's all the same. It's all the same. Your meaning that you give it changes. That's the difference, right? Some people might feel like they're in total abundance on some things and lacking on other, and the energy that they feel towards this is different from the energy they feel towards that, and that's why they have those different kind of interactions. Why they sit there and wonder why this person is doing so well at that. It's because they happen to live in an abundance mindset with that particular item, whatever it happens to be. Well, at least you're honest. I'm honest. I mean, honesty is the only thing that I have. I don't have anything else. I don't have anything else. So it's just like if I wasn't honest, then I wouldn't be here. That's just all there is to it. All right, the meaning you give everything in life matters. It does. I treat it like a soap opera, and nothing surprises me. My border collie is smarter than all of us. The secret to success is don't have a baby until you're ready. Go to school and get a job, save your money, and live way below your means. Good day, UE. Good day, Terry. This sounds like art. All right. You don't have an ego like David Lee Roth. Well, yeah, of course not, but everybody has an ego. Everybody has a belief that things should be a particular way, right? And the moment that you have that sort of belief that it needs to be this particular way, what you do is you set up limitations, you set up walls, you put up the blockings, you end up denying that in which it is that you feel like you would really want in your life. Like if you want it, then you feel like that need, and that need turns into a negative energy, and that negative energy is repelling. And it's so crazy to think about that the thing that you really would want in your life is the thing that the energy that you're feeling from that is the thing that's repelling it. It's just like it's one of the most like backwards ways of actually understanding how the universe operates is to know that if you are looking to have something in your life, the way to get it is to literally let go of it, is to let go of having it, to live in the life of not feeling what it would be like to have it, but the feel of having it. Not like, because the feeling of to have it means that I don't have it now and I wish I did, right? And that's the negative energy that comes from it. Living in an energy is I already have it. It's already here. I already got it. There's like that's it. I've got it. Right? That's the energy in which that is neither repelling. It's not repelling nor negative, or actually it's attractive, right? To already be in the energy and say I don't need it. I already got it. It's just like it is. It's just an is. Right? And that's where like most people end up failing, especially when it comes to money. It's because they feel the lacking of it. They feel the pressure and the pain and the problems that they experience from the lack of having money, and then they look at all the issues that come from why it is they have that lacking, and then they don't realize that by thinking in this fashion they are actually creating the environment that now provides them with all the lacking that they have on account of it. It's just like it's a self-fulfilling prophecy. And and part of getting rid of that is literally understanding that the money is everywhere. It flies around everywhere. You just have to go out there and get it. And that when you see other people doing it, you can say, hey man, yeah, there's still money flying around everywhere. I can go get it just like they are doing it, and everybody else is. And I'm not lacking. The only thing I'm lacking is my motivation to go out there and do it. And motivation comes from actually doing it. So just do it. Just live it. Just go and do it. When I started this YouTube channel, I had no expectations of ever having a single subscriber. I'm at 140,000 subscribers. Never once did I ever carry the energy, I want to have 140,000. What would it feel like to have 140? I never lived that. I only lived in, I have a YouTube channel. I'm a YouTuber. I never really lived any kind of feelings or anything else other than that. And when it grew to 140,000, it wasn't like a feeling that I had about it. It was just a feeling, I'm a YouTuber that has 140,000 subscribers. I never had what it would be like feeling. I only had a feeling of it is. That's it. And so now it's very natural and very free flowing and easy for me to do. And this can be the same for everybody and everything on anything out there. It doesn't matter what it is. Yeah. And it's hard to explain because most people look at the scarcity mindset and say, yeah, but you don't know me. And you're right, I don't. I don't know your conditions. I don't know what it is that you're experiencing. Right? We are all experiencing and dealing with our life in the consciousness level that we are in. But knowing that the abundance is constant, it is always there. It's just your own mindset that limits you from acquiring it, no matter what it is. Anyone can become a streamer, not everyone though. It's okay to work normal jobs too, in my humble opinion. Absolutely it is. In fact, I like people tell me all the time, when are you going to quit your job? And I'm like, I have no idea. Like, I don't know. I don't have like, once I achieve this level, I'm going to quit my job. Like, that doesn't occur. The time I'm going to quit my job is when it doesn't make sense for me to go to work anymore. That's when I'm going to quit my job. But until then, I have a W-2. I go 9 to 5 just like everybody else does. I have to pay my bills with my paycheck just like everybody else does. I mean, granted, I do have a YouTube channel, which then gives me the ability to live in a fairly affluent area, which I normally wouldn't be able to do. But it's expensive to live here, so I have to earn a lot of money in order to stay here. Uh, Spiritual beings have a human experience. That's right. We're all internal, eternal spiritual beings having a temporary human experience, right? And this is really where I find that, when you hear people say this like kind of crazy thought that you're all just an illusion, like you're an illusion of my reality, like, nothing really exists out there except for, my thoughts or whatever. It's the truth of the matter. Everything that you are experiencing in your life is because of the way that you are thinking. Every single person in your life is there teaching you a lesson, no matter who they are. If they are in your life, they are there teaching you a lesson for something. And, a lot of times we just don't learn our lessons. And that's why, we have certain things that are occurring within our lives is because we haven't moved on. We haven't, expanded our consciousness. We are stuck at that level. And a lot of times we have blame on other people. We put blame. If they hadn't done this, if they didn't treat me that way, if they, whatever, if they had, or maybe if they'd done something, whatever, right? They did you wrong. Hey, that sucks. You got to forgive them. All right. You can't blame them. They're operating at the level of consciousness that they feel is appropriate. Like they're doing the best they can. That's hard to accept. That was hard for me to accept that, I look back in my life and I think, man, I have a lot of grudges that I was holding. I held these grudges against people, some major ones. And I realized when I thought about it, my own issues that I was facing, I'm thinking, okay, I've moved on because I'm thinking differently now. And those issues that I was facing back in the day, I recognize them in other people. And I say, dang, man, that sucks. Like like I understand where you're at, man. You're operating at a different consciousness than I, like you were operating at the consciousness that I was operating at. I had that same beliefs, that same level. I get it, man. I understand. I understand why. I understand why you're angry. I understand why you did it. I understand all that stuff. I mean, I get it. Like, I forgive you for that, man, because you're doing the best you can. Because I was doing the best I could at the time. And it was horrible. Right? I look back and I was like, dude, you were doing horrible. Yeah, but I was doing the best I could at the time. I mean, that was it. I was trying, right? I had to move on. I had to figure it out. And so, yeah, getting mad at people for what they had done in the past. I mean, yeah, you can be. There's a lot of reasonings to hold the grudges and stuff like that, but ultimately, it's not gonna serve you any. It's not gonna help you. It's not gonna provide you with that internal energy of attractiveness. It's gonna hold a very repelling energy. Okay? This is again, it's all you can all find it right down to playing with the dog. Right? If you had a grudge against the dog would feel it. Don't think that they wouldn't. Everything feels it. You hold a grudge against being rich people. Do you think that the universe is going to provide you with the ability to become rich if you hold a grudge against rich people? Do you think if, all the rich people out there should be taxed? Do you think that the universe is going to provide you with the ability to become rich without getting taxed the piss out of? Right? This is like if you look upon the universe as a way it should, like, other than just accepting it for what it is, then you might get provided with that very thing. You think that the world is full of tyranny and disgust, then you might actually get that in your life, is tyranny and disgust, because that's what you were thinking about and feeling. That's like, it's not the universe's fault, it's yours. you know All right, what are we up to? 2 hours and 27 minutes. Good Lord, we are really just kind of going for it here. What time is it? 6:30. Still early though. All right, I dig the mindset, even though I don't totally get it. No, that's okay. I mean, it's not. And again, like this sort of level of thinking, or what it is that I'm talking about, it came about because I had to figure out what happened to me on my YouTube channel. Like, you guys got to understand, 40 years old, I was drinking a lot. I was horribly in debt. I had like, my vehicles were all broken down. Like, I didn't have anything going on. Couldn't make my bills, couldn't pay my bills, none of that stuff. And one day I just changed it. I said, okay, that's it. I can't do this anymore. And I quit drinking. And it took a long time for things to really start to change around. But I realized, man, drinking was covering up a whole lot of bad mental health. Right? I mean, it was like, I've been drinking my whole life, like essentially since like even before it was legal to do it. And then once I was legal to do it, it was all the time for 20 years, like my entire adult life. And so I had to really come to an understanding that I was not thinking properly, and I didn't understand what it was that I was doing at all. You know? And so when something like YouTube took off and all of a sudden I got like this following and I'm making this money and I'm getting invited to go speak at places and I'm like, what in the hell is this? Like, what is this? Like, this is not, I wasn't expecting it. I wasn't trying for it. I wasn't thinking that anything like this would happen in my life, but yet here it is. Boom. All right. And I thought, well, how? Like, how come this didn't happen to that dude? You know, like why me? Yeah. Like, it literally felt like, it was just like, bam, there you go. You get a little touch of magic. Bang, here you all this stuff happens to you. I'm like, this is so unfamiliar. This is not right. Right? Talk about imposter syndrome. Yo, right here. I mean, I even said it many times. It was just like, I'm just gonna keep going until people just figure me out, and then, and then it'll all be over. Like my run will be over. I literally thought that. Like it was just like, people are going to know that I'm just like, some dude sitting in some car and don't really have anything. Like, I figured people thought that I was like a mystery or something. Like, they didn't really know who I was. And that's what gave me the appeal or something for the crowd. Like, I didn't know. I had no clue about what was happening. And so, again, like, I had to reverse engineer a lot what was going on. And I had to think back. It was just like, what was the major changes that really started to occur in my life after the event that had, like, after a particular event? So the major changes that had occurred were really like with the YouTube channel and the money that came from it, but really it came from what it was that I was thinking ahead of time. Right? It was like, hey, I got to have a better life. I got to do things in a fashion that's going to provide for my family in a better way. And subconsciously, I started coming out with the the outcome that literally led me there, which was the YouTube channel and going and doing all the things. Like it was almost like I didn't even know how to do it, and that's okay. You don't have to know how to do it. I didn't know what steps I needed to take. I didn't know. Like, I didn't know what it was. Like you're even saying, man, I don't know what actions to take. I didn't know what actions to take. I had no clue. Right? I just knew to make the next video. That's it. That's the only thing I knew. Just make another video. That's it. Like, I didn't know to save money. I didn't know to get at it. Like, I just kind of did that naturally as it was happening. But I didn't have a plan to say, okay, I'm going to make 100 videos, get the money from that, pay off my credit cards, and then I'm going to make another 100 videos, and I'm going to do this with that. And then none of that occurred. Like, I didn't think any of that. I was just going for it, right? Like something else had grabbed a hold of me and was shoving me through it. There you go. Yeah. So this is it. So I'm thinking back. Okay, what were you doing? Well, I'm thinking differently. That's the difference. I was thinking differently. And because I was thinking differently, I started taking different actions, right? I wasn't thinking about getting drunk and stoned. I was thinking about where it is that I could get another $20 to pay on my credit card. Literally, $9,000 credit card. I was trying to figure out how to get $20 because every time I had a $20 bill, I would go down there and I would pay it on my credit card. Talk about an insignificant payment. Didn't matter, right? Subconsciously, I knew that I wanted to pay off that credit card. It was literally 6 months later, that credit card was paid off. I didn't even know how that happened. Like, I think back and I was just like, man, all of a sudden, it was like this credit card was down to $3,000 and I had an envelope with $3,000 in it. And I'm thinking, I'm going to go get out of debt. I made a video. I did a YouTube video that day of that event. All right. The day that I got out of debt. And I didn't know, like I said, I didn't even know how that happened. I just know that I was taking $20 down there. Anytime I ever had $20, my bank was down at the grocery market, which was just down from my house. I would go down there, I would put $20 and I would walk back home. Right? Subconsciously, the universe was just like, hey, bud, you want that credit card paid off? Done. What in the world? How did that happen? All right? I mean, this is like the experience that I got. And I'm thinking back to it, and I'm like, I put the $20 down, and I was, how did that happen? Right? And it was just like, you were just committed to it. That's the only thing. Yeah, well, that's it. You were committed to getting out of debt on that credit card, and you did it. No point in trying to figure it out. That's what you did. And I'm like, no, it happened faster and in a way that I didn't even feel like I did it. Like I didn't remember paying the $9,000 out there. I mean, I remember the day with the $3,000 because I made a video about it. But leading up to that, I don't remember a single payment. I remember going down a couple of times with the $20 bills and doing that, but it was such a habit, like I didn't think about doing it anymore. One day I was out of debt. And I'm like, wow, okay, well, that's cool, And then like a month later, I was just like, man, look at the savings. A month later, it was just like, wow, it's like the most savings I've ever had. Yeah. Right. I stacked it up and all of a sudden, life changes again. And here in my mind, I had this vision of being back out in my old neighborhood where I grew up. And so there's not a lot of houses in 2022, or actually late 2021. Right? There wasn't a lot of houses for sale. We're still very much in the uh, the moratoria where there weren't, kicking people out, evicting people, and they weren't foreclosing on anything. So there was very little inventory out there. And the house that I'm living in at the time, the houses were selling for a lot. So the landlord's like, man, have you seen how much houses are selling for? Like, I want to sell this place, man. You can buy it if you want. And I'm like, this isn't the house for me. Like this, not this place. So went looking for houses, which weren't a whole lot available, not in the area that I wanted to be, back in my old neighborhood. Found this one that I'm living in right now. It was really the only house that suited my needs and like, what I needed for the family and everything I had going on. It was the right fit. It barely fit, but it fit. It was the only house. Everything else wasn't going to work. I would have to leave the area. So I thought about it, It was just like, well, you wanted a house back in your old neighborhood with a big front yard, a place that you could work on stuff. Like everything that you talked about that you wanted for a house, that's it. That first one you looked at, the only one that's available, the only one that fits your needs, there it is, man. And you have no other choice unless you want to leave the area. Like, I didn't do this. I didn't set this up. I didn't make this happen. This is all being done to me. This is the way I'm feeling about it. This is the meaning that I'm giving it. Not realizing subconsciously, I set this up. It's exactly what I described. Place out in my old neighborhood, big front yard, suitable for the family, suitable for having mom come stay, has a place to work on stuff, right? Everything that I had imagined, everything that I had dreamed for a house for my family, it's being presented to me, and I have no other choice but to accept it. Isn't this weird? Right? That subconsciously, somehow, what it is that I envisioned is now being presented to me, and I have no other choice but to accept it. Like, how in the world does this happen? See, I know it's from, and a lot of it came from, and I had resistance. Like, I was resisting that. I'm like, no, and it was just like I look back and it was just like, bro, that's exactly what you were looking for. Like, that's exactly what you were looking for. And now here it is, the event's coming and you're denying it. Like, you're sitting here going like this, going, no, 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 no. Right? Like, how big does your ego need to be in order to be denied what it is that you have been subconsciously trying to build up to? How is it that this could be taking place? This is really what my mindset was. Right? A lot of it had to do with the shit that I was reading on the internet from the comments and telling people, hey, I'm buying this house. They're like, oh, you're going to go in the water. You're going to lose your ass. You're going to foreclose. You're going to be upside down, blah, blah, blah. Right? All this crap, And I'm like, Jesus, this was overwhelming me. Right? But at the end of it, what happened? Right? It was ultimately one of the best decisions that I had ever made. I should just let things go. Just let it go. I wouldn't have had to deal with the stress of all the crap if I had just let it go, and just went with it. Right? Understanding that I don't understand what's happening. That's okay. Own that. Own the fact that you don't understand it. It's fine. All right? Because the universe is taking care of business because subconsciously, this is what you have built because of the way that you have been thinking. No matter what it is. I don't care where you are, what you're doing, anything in your life right now, regardless of the circumstances that you have faced, because we all face different ones, you are right where you are because of the way that you are thinking. You may be a victim of your circumstances, right? But it's still the way that you're thinking, which has now put you in the position that you are in. And a lot of times it's familiar. That's why you're there. It's because it feels natural. It feels right. Maybe, if you're in a toxic relationship, you might have had very controlling parents, right? And because of that, it feels familiar, so you stick with it, even though you don't like it. But because it's familiar, you secretly love it. Yeah. And you secretly love the tension that you get from it. Not knowing, like most people feel, no, I don't want this tension, but you do, or else you wouldn't be living it every single day. So you secretly love it because it's familiar, and you like the familiar because it feels like family, no matter how toxic it is. That's the reality of it, right? All right, let's check out the super chat. Larry Bird, UE, I'm still drinking at 38 and I need to quit. Yeah, Larry, it's a decision that you're going to have to make, man. I mean, it's just like, if you truly want to do it, you're going to do it, but you're probably going to need to talk. You're going to need to talk to people because doing it on your own means that you have to sit there with your thoughts. And that's very difficult when you're just sitting there dwelling on your own mind, right? I mean, that's horrible. I cannot find a better way to be in the energy of sobriety than to be in the rooms. You got to go to AA, right? Or find sober friends to hang out with. But most, like, I don't know a whole lot of sober people, really. I mean, I know some, but for the most part, there's not a lot of sober people out there that you can relate to and hang out with. But when you go to the meetings, you're all sharing the same thing. You're all sharing your experiences and your stories. And by sharing those experiences and stories, you relate to it and you're not alone. And by not feeling so alone, well, it feels easier. I wouldn't necessarily say it feels easier as much as you know that other people are experiencing it as well, right? So you just don't feel alone. And I think that's probably a lot of it. It was just like, if you felt alone, like you were the only one doing it, then that would be hard. But when you realize that there's other people who are doing it too, right? That makes it easier for you. For me, I was like, my wife, she went to rehab. She was 30 days in house, all that stuff. Then she was very, very much involved in the AA. So I got a lot of residual from her. I didn't go to the rooms, right? And I had to sit there and deal with the all the problems that I was trying to cover up with drink, and I had to deal with that on my own. But luckily, she was able to share a lot of the stuff that she had learned through AA with me, and then therefore, like I said, residually, I was able to gain a lot through her. So, I mean, I don't know how I would have done it, right? So, again, it's going to be very difficult to do it on your own. Some people can do it, right? But I find that most people who quit on their own and don't really deal with a lot of the issues that had them drinking to begin with, then really those issues kind of magnify. And then they find that they have actually more issues because they quit drinking, right? Because again, they were covering up all this stuff, right? So then they have to start dealing with that, which means even more work and becomes even harder because not only are you trying to deal with this addiction, but then you're trying to deal with all these mental issues. All right, what time is it? 2:44. All right, people are weak these days. If they're not on the alcohol, it's some kind of pharmaceutical or weed, etc. Yeah, but I don't like, I mean, you can call it weak. That's fine. Because it kind of is. I mean, weak-minded, I guess. I don't know. But it's deeper than that, right? It has a lot to do with the energies that we were carrying that were not only inherited, like literally ancestral energy that has been passed down from generation to generation that we are carrying. And a lot of times it's like we don't even know why it's there or why it occurs. And this is, you hear sometimes like, well, alcoholism runs in the family. Yeah, it's because they keep sharing this energy with each other as they go down, right? The father carries the energy, he puts it into the son carries the energy, puts it into their sons, and it's just going on forever. And they all live the same life because they carry this energy, they drink to cover it up, or whatever. Uh, uh, the path to sobriety and recovery is not easy. You will want to be healthy. I moved across country to go to rehab and now live in sober living. It's been hard, but worth it. Well, good for you, Lyndon. It's like, it is. It's not an easy path to take, right? It's a committed one, but once you're there, you realize, you look back and you're like, man, like I think about all the day. I would love the idea of being able to have a few drinks and enjoy that social atmosphere, where you loosen up a little bit after a few drinks. That right there, that little bit, I love that. I loved it. I loved it. I'm willing to admit it. That was the coolest, right? I enjoyed it. Those first couple of beers and that first, when you're in the crowd and you're hanging out or whatever, man, great feeling, great energy, great vibes. Man, you can't pass that up. Like I wouldn't give it up for a million. Like I mean, I would not give up all those memories that I had of doing that kind of thing. But there's consequences to pay for the pursuit of pleasure. And this is the ultimate out the reality that I came to, is that every time you seek a pleasure, you are going to experience pain from it. And it's like, it's a balancing act, right? Like the universe is just like, oh, you had some pleasure, that was cool, here you go, there's some pain to balance you out, because got to stay in balance, right? you know and and that's what ends up coming from it. The more you pursue excellence, the more pleasurable things that naturally occur to you, because you really just don't have any other choice but to experience those things because of all the excellence that you have pursued. Starting the business, working, doing the sales, doing all the other stuff, and then you're rewarded for it. Like, oh, hey, check this out, right? So yeah, and basically drinking is nothing but pleasurable, a chasing of pleasurable experiences that result in nothing but pain. All right. You got to have willpower. We inherit the sins of our fathers. Yeah, I was so negative in the womb, I came out small and decrepit. Oh, jeez. All right. You cannot make money alone. You need other people to buy and sell. Yeah, absolutely. Like you got to be involved in it. That's the thing. You got to be out there and moving and participating. And just sitting around expecting doesn't work. Alrighty, guys. This was fun, but we're into it for almost 3 hours, and I think that's probably enough. The first 2 hours of the video is really, I believe, the most important, trying to get through those speeches, internalizing that information. I know it's difficult to understand what it is you're supposed to do with the information, but the natural consequences of internalizing it will be an intuitive, you'd be naturally, intuitively just making the right decisions, and regardless of anything else. A lot of times you just may not be making bad decisions because you are aware of the situation in a different fashion. So thank you for being here. Thank you for hitting that like button. Thank you, everybody, for those super chats. We got $56.89 in super chats. This is absolutely amazing. All right, sir, I can't coddle your victim mentality, your mind. What are you talking about? I'm missing the where my growth is. Organs love me enough for me. Sorry, yours off different. I don't know where you're going with that. Okay. My father died from his drinking. I never had the drink problem, but other drugs, yeah. I like being sober and clear-minded. Uh, all right. Have a blessed Sunday, sir. Yeah, you as well. Thank you, Yui. Hashtag gratitude. Yeah, you bet, man. Thank you, Terry. Thanks for the info. Yep, you bet, Larry. Thank you for all those super chats, man. It was very generous of you today. You guys are awesome. Alrighty, guys. I'm going to call it quits there. I'm going to go in and get some breakfast and hang out, but there's plenty of links down in the description of this video for you guys to go and check out and study and learn about. Understanding that the communications through the mainstream media has been propagandized to lead you in a particular belief, and mainly is to have an elevated inflation expectation. We learned from these speeches how it is that they use that elevated inflation expectation to their advantages, and how that communication is really more impactful to the economy than the actual actions that the Federal Reserve is taking. And again, like, once you have read through those speeches, internalized all that information for yourself, I believe that you would just naturally be making the right decisions for yourself as well. All right. I want to teach you how to trade, Yui. Yeah, that might be a good thing for me. All right. What are you having for breakfast? I don't know. Going there. I think we still have some of the farm eggs that a friend of mine had grown. All my chickens, I gave my chickens away because the damn possums kept getting into my coop. So I might have some egg sandwich or something like that. All right. You guys are awesome. Thank you for hanging out all this time. Thank you for hitting the like button. Thank you for all the super chats. You guys are amazing. Uneducated Economist. You guys let me know.